Committee?
We are indeed, Chair.
Thank you. Mr. Sokombela, you are still under the oath you took yesterday. You understand that?
Yes, Chair.
Thank you. Let's proceed.
Thank you, Chair. Mr. Sokombela, we finished off your evidence yesterday with you taking us through the extensive preparatory work and work during the audit that the Auditor General's Office and your team in particular did in the audit of the 2017 financial year. I'd like now to turn to the kind of key areas of concern that you identified in the course of that audit. We pick that up at your affidavit at page 34. To start with, can you explain to us how the AG's overall audit opinion differed from that of the previous 5 years?
Thank you, Chair. The audit opinion of the Auditor General of South Africa in 2016-17 regressed from an unqualified audit opinion with no findings from 2012, 13, 14, 15, and 16 to a qualified audit opinion with findings on compliance with legislation as well as findings on performance information or predetermined objectives, i.e. it regressed from being a clean audit to a qualified audit with significant amount of findings.
Did the role that the AG play, the auditing that it did for the 2016-2017 financial year, because I think that's the year on which we are now, did it entail simply auditing that year, auditing SAA for that financial year, or did the AG also look at the years when the auditing had been done by PwC and Konki and take a view whether they had done a proper job?
Chair, what the standards or auditing standards requires us to do when we take on a new engagement or a new audit is to perform some work on the opening balances, i.e. the reason why for that is for us to determine in terms of whether we can rely on the opening balances, especially in the balance sheet of the business. We did not go to an extent of opining on whether then the work of the predecessor auditors was appropriate, because that would fall outside of our mandate. That is the mandate of the Independent Regulatory Board for Auditors that would review the work and come to a conclusion whether it was appropriate or not. However, when we were doing our review of the opening balances, what we normally do is then to request from the management of SAA through the letter. We write to them formally for SAA management to allow us to request access to the audit file and the working papers of the predecessor auditors, so that we can be able to go through their own working papers with an objective of seeking reliance on that work. So that is the extent, Chair, that we go into, and that is the extent that the auditing standards allows us to do.
Understand your evidence to be that the auditing standards and the work that you have to do when you audit for 1 year does require you to have a limited look at the work done by your predecessors. And I think you're saying that you do that in order to see whether, for purposes of your portion of the work, you can rely on their work. Is that right?
Absolutely.
Yes. I take it that logically that means you may find, or any auditor who comes in may find themselves in a situation where they say, having had this limited look, we don't think we can rely on our predecessors' work. Is that something that does happen from time to time?
Absolutely, Chair.
It does, yes.
It does happen.
Yes.
Yes.
In this particular case, did you find that you could rely on your predecessors' work, or what view did you take after having that limited look at what they had done?
Chair, I think, as I said, and I want to state also categorically that the work that we did with, I think, with us reviewing the opening balances was for our own purposes. It was not for the purpose of opining or not. However, Chair, to answer your question on the work that we've done in the opening balances for the predecessor auditors, there were some issues that we found, specifically issues of lack of documentation, where we couldn't determine in terms of how then certain account balances were tested. And that made us, Chairperson, to perform additional procedures at SAA. And that became a very painful process also for the management team at SAA, because I remember we had to ask them, for an example, to prove to us the validity of the aircrafts that were sitting in the balance sheet, because when we looked at the audit files for the predecessor auditors, we couldn't find in terms of how those balances, have been satisfied. Some of the aircrafts, especially the Airbuses, were bought, I think, some time ago. I think as far back as 2002, if I'm not mistaken. So there's a finding, I think, it's part of the annexures for the in my affidavit, where we had to, unfortunately, raise that finding because there were no documents. I think the international standards, the international financial reporting standards, for an example, requires that an aircraft there should be componentization of the aircraft. You can't have an aircraft as a full aircraft in the balance sheet. You need to componentize it to ensure then that it meets the requirements of the standards. So those were the limitations that we encountered when we looked at the file. And at SAA then, because with some of the information we couldn't find, we ended up saying, perhaps if you can't prove you don't have source documents maybe since 2002, maybe we can look at at their own ERP solution. They are using SAP to check purchase orders, because at least the record is there. And then we ended up saying, perhaps let's give you then, I think normally in South Africa, it's about 7 years. At least maybe let's give you a leeway to say, maybe give us then the most recent information that we have, at least for those assets maybe that were purchased at least 7 years ago. But because of other factors at SAA, because when it comes to record keeping, they've got very, very poor controls there, so they couldn't prove those to us. So I think, Chairperson, that is basically a snippet of the issues that we've identified.
No, that's fine. I may have asked you that question ahead of Mr. Mbigiwa reaching the point where he was going to deal with that. Mr. Mbigiwa, you can either continue around this area or deal with it at a later time that you had planned to deal with it. But I do want to have a very full picture of what they found was the position and whether what they found gave any indication about how well their predecessors had done the job. And we've got to look at that because he has already told us about some of the things that they found. Yeah, I mean, the opinion that they gave, and we know that the predecessors had given SAA a clean bill of health for 5 years. So the question arises as to whether those opinions for those 5 years were really properly arrived at. Was a proper job done, you know? And I accept that the witness is trying to be very cautious in not unduly criticizing his colleagues in the profession. I understand that, but obviously he will appreciate that he has got to give us his evidence as frankly as possible and honestly. If he has a view that they did a fine job, he must say so. If he has a view that they didn't do a fine job, that's what he needs to say if he's able to substantiate that.
Indeed, Chair.
Thank you.
Chair, I do intend to go precisely there in due course.
Yes, no, that's fine.
I will take Mr. Sokumbela to the detailed
Yes.
management report
That's fine.
and specific
That's fine.
findings on the opening balance.
That's fine.
For present purposes, Mr. Sokumbela, can I just clarify what you say about the opening balance? The reason that in particular you're able to make a comment about the previous audit, is that because it's the closing balance of the previous year's audit?
Absolutely, Chair.
Okay.
And I think from what you have said, I must accept that that gives you a rather limited picture of what may have happened. Maybe you might need to look at much more, I don't know, but you might be able to say, no, from an auditor's point of view, if I've got that, then really I've got quite a reasonable picture of how the job was done.
Chair, I think it's worth noting that the audit work in the audit file, another experienced auditor needs to come and reperform that work and come to the same conclusion.
Yes, if the job has been done properly. Is that what you are suggesting?
Yes.
Okay,
Yes.
okay. Once there is a difference of opinion, it means that there is a problem.
Once there's a difference of opinion, because all of us we subscribe to the same
Standards.
auditing standards,
Yeah,
the methodologies may differ
yeah.
here and there, but those methodologies have been prepared in accordance with the auditing standards.
So one should worry if there is a different opinion later on.
Absolutely, Chair.
Okay, thank you.
Mr. Sokumbela, before we move on, your audit opinion involved restatements as well, didn't it?
Absolutely, Chair.
Can you tell us what a restatement is?
Chair, a restatement can be as a result of maybe a change in accounting policy, when maybe the company maybe has decided to change how it's going to account for its transactions or account balances. A simple example of that is when a company has been accounting for assets, or let's say land and buildings at cost. But then it decides, Chair, to account for it at revalued amount. Then what then happens is that in the year then that it makes that decision, then it needs then to apply that accounting policy as if it has been in application for the previous years. I think the standards are saying that you need to apply it retrospectively. So that is one instance. Another instance, Chairperson, where then the restatements are done is when then there were errors in the financial statements for the prior years. So then there's an accounting standard then that provide guidance in terms of how then those errors needs to be corrected in the financial statements. So then the restatements in the financial statements then, Chairperson, maybe as a result of those two. Yeah.
And following on from the Chair's questions, were the restatements in this instance able to shed any light on the audit work done previously?
Chair, the restatements that were effected in the financial statements of South African Airways for 2016-17 financial year were as a result of correcting the errors for the prior year financial statements.
Okay, thank you.
Thank you. Mr. Sokumbela, I'd like you to take us through the key areas of concern that you identified during the course of the audit.
Excuse me. Thank you very much, Chair. Chair, yesterday, I think I mentioned that the audit of South African Airways was done by the Auditor General for the first time in 2016-17 financial year. And I think one of the things that I said is that in terms of law, the Public Finance Management Act, the board of SAA was required to give us financial statements by 31st of May that year. However, due to liquidity challenges that they faced, because they couldn't prove the going concern assumption, they ended up giving us the financial statements by 31st of October that year. And we then signed an audit opinion on the 8th of December 2017. So I've already talked about the regression that the audit opinion of SAA regressed. Chairperson, I've summarized the key areas of concern in the audit of SAA in the management report, in the executive summary, which forms part of this affidavit and is on Annexure PS 25. And
what page is that, Mr. Mbidu?
Sorry, Chair. I'm going to go there in a moment.
Yeah.
It's at page, it's in DD 20B at page 572.
Let me get to it before you continue. I don't need to look at it for now. Okay, yes. All right, continue then. Continue.
Thank you, Chair. Chair, I do want to state that the management report was communicated to the board of directors of SAA on the 1st of December 2017. And the most important thing to highlight in terms of the key areas of concerns that we had is that at SAA, South African Airways faced, there was a lot of instability that was happening at SAA. In the executive committee of SAA, more than 40% of the positions were filled in an acting capacity. And Chairperson, that created a lot of challenges, especially to the control environment of the business itself, in terms of how the business is supposed to look like. During that financial year, the board also was new. They were appointed 6 months before the end of the financial year. And also, one of the challenges also with that board is the fact that they did not have an aviation specialist or someone that has got an experience in aviation. And also then that is one of the issues also that we've identified to say SAA is an airline, and if then they don't have an aviation specialist, then that might pose a challenge to SAA. And also
that is now at board level.
Absolutely, Chair.
Yes, okay.
At board level, at board level, that was the challenge that we had. Maybe if I can go back to the executive committee, just at a high level there, I think one of the key positions, for an example, that were vacant there was the position of a chief executive officer, which is a very important position. The position of a chief financial officer was vacant, also was filled in an acting capacity. The position of a chief commercial officer was also vacant, and the chief commercial officer in an airline is a very, very important official because it's responsible for running basically the airline, especially the profitability of the routes, among others. The chief strategy officer, also there was no chief strategy officer at the time. The other position that, in as much as it was not at the level of EXCO, also that was, I think it was not vacant per se, but I think the incumbent was on suspension, was the position of a chief procurement officer, which also contributed then to the weak control environment, especially in the areas of supply chain management. Another challenge or concern that we had at SAA was the matter of officials that lacked appropriate competencies, especially in the areas of preparation of financial statements, understanding, the international financial reporting standards, understanding the laws and regulations governing supply chain management, Companies Act, among others. And also officials that were responsible for the annual performance report or the performance information as well, they did not have an understanding of how to comply with the National Treasury Framework for Program Performance Information, which is a framework then that guides entities in terms of how they need to prepare and report on performance information. So that had a negative impact because we ended up having a lot of findings, Chair, in those areas. Chair, the compliance with legislation at SAA was a serious challenge, specifically on the issues of irregular expenditure, fruitless and wasteful expenditure, the Companies Act, and also one of the issues that we've identified there is consequence management. Because in as much as there were all of these transgressions that we could see in the ground, but we couldn't see consequence management that is being effected to those that transgress the law. In the year under review that we did at the time, 2017, in the annual report, they disclosed the regular expenditure of approximately 125 million, which was a significant increase from, I think, just over 5 million that they disclosed in 2016 financial year. However,
was that something like 500% increase?
I did not count the percentage.
But sorry, that is reported by SAA itself?
Absolutely, Chair. However, the 125 million also that was disclosed as irregular expenditure was not complete. And we ended up qualifying the audit report of SAA because of those challenges. So I think it's very important to mention that, Chairperson. Another concern that we have was the legal division as well as the office of the company secretary in terms of the capacitation of those offices. They were severely undercapacitated. In the legal division, Chair, there was no capacity to ensure that for all the tenders that are awarded, there's a contract that is being signed. South African Airways was operating on the letters of awards. For an example, when the tender is finalized, then there will be that letter then that is sent to the winning bidder.
You have won.
We have won. But
There was no contract signed after that.
Subsequent to that, there was no contract signed.
And that's not how it's done.
That's not how it's done, Chairperson. Yes. So that also, in our view, was a big risk for SAA, because if you don't have a contracts that are signed with your suppliers, how are you going to control them? You know, they may deliver goods to you, or they may that of poor quality, or they may not even deliver them at all, because you don't have a contract. But they were paid, you know, and they were paid based on this letter of award. So for us, that we said this is exposing SAA to significant risk to deliver.
Can I just ask before you proceed, don't forget the next point you wanted
Absolutely.
to make. Were you able to get a picture of how long that had been going on? For how long that had been going on, that they would just issue the letter of awarding the tender without having a contract concluded?
Chair, I think that has been going on for quite some time. Because
and for quite some time would be for some years.
For some years, Chair, even though we did not count in terms of how many years, because of the magnitude of these challenges that they had there, because SAA has got a very big contract register that they had, and majority of those we could not find the signed contracts.
You must tell me if the picture I'm having is not the picture that you got. You say you didn't count how many years, and I think you said because of the magnitude and so on. Am I right to get the impression that you thought, where do we start if we want to count?
Chair, you are right, because the credibility of the contract register itself was questionable.
Yes. Would I be right in thinking that if you pick this up as a concern, then your predecessors ought to have also picked it up if it had been going on for some years?
Chair, if they found it the state that it was, yes, they ought to have picked it up. Yes. However, I was not there at the time, so I don't know in terms of what the circumstances were. However, when we were there and we looked at the state of affairs, it was quite dire.
Okay, thank you. I interrupted you while you were continuing.
That's okay.
Chair, may I ask one follow-up question arising from that before you proceed? Can you give us an indication of what would have formed part of your audit year that would also have formed part of prior ones, subject, of course, to sampling and the like? A contract entered into in 2012-2013 that was due to run until 2019. Would that form part of your audit year?
Absolutely, Chair.
And please continue.
Chair, as long as that contract is still effective, because the key issue is that contract, there will be expenditure that will flow through the income statement, or if maybe it's a contract to deliver assets, there will be assets that will need to be recognized in the balance sheet. So we ought to ensure then that we test those, regardless of when they were entered into.
Well, let's go back to my earlier question about whether or not Pricewaterhouse and Konki should have picked up what you picked up about contracts. You said, well, it depends how the situation was when they arrived and you were not there, so you don't know, but if it was the same as what you found, they should have picked it up. That's my understanding of your evidence. And you have made the point that SAA is big and they have got lots of contracts, big contracts and so on. So my question is, could any auditor audit SAA in the years that preceded your coming in? let's say the past 5 years from 2011, could any auditor who did a proper job not have looked at what contracts and tenders SAA had awarded? Could anybody doing auditing of any entity or an entity such as SAA not look at that?
Chair, they will have to look at it.
They would have to look at it.
Absolutely.
And if they looked at it, is there any reason why they would not have seen that the state of the contract register leaves much to be desired? Is there any basis you can think of why they would not have picked up that there were no contracts?
I can't think of any
basis,
Chair.
Yes.
However, I must specify that I don't know what the approach was, However, it's important that the auditors looks at contract management.
Yes, well, that's what I'm trying to establish, because you see, I'm not an auditor. I'm not an auditor. You are an auditor. They are auditors. So I'm trying to see what could be expected from an auditor who does his or her job reasonably well. And so when you paint the picture that you paint to me about the state of affairs at SAA during the 2016-2017 financial year, that there were many cases, as I understand it, where just a letter awarding the tender had been issued, but there were no contracts. I want to have an understanding, what are the chances that any auditor doing his or her job properly could miss that in the previous years? You as an auditor, you might be able to say, no, it would be easy to miss it. Or you might say, I'm surprised they missed it. If that is the case, I would expect any auditor worth his salt doing his job or her job properly and reasonably to pick this up over the years, especially if they've been auditing an entity for 5 years in succession. How could they not pick it up, at least on one of the 5 years? Do you want to say anything about it?
I think, Chair, the chances are they should have picked it up.
Yes.
If the situation was the same situation as we see.
Yes.
In 2016-17.
Yes. Thank you.
Thank you, Chair.
Thank you, Chair. Please continue where you were.
Yes.
Thank you, Chair. Chair, I think one of the other things that I wanted to mention, I've mentioned the undercapacitation of the legal division as well as the Company Secretary's office. I think one of the concerns that we had there at SAA is that the Company Secretary's office is very important, especially in terms of them fulfilling their responsibilities in terms of the Companies Act and advising the board of directors. There's many transgressions that we saw at SAA out of the board resolutions that were made. And we couldn't see where the Company Secretary has advised the board. If I may make an example, for example, there's an example where we found out that SAA has provided financial assistance to its subsidiaries, the air chefs, the South African Airways Technical. There's another small subsidiary that they have that is called South African Airways Travel Center. They provided financial assistance to those subsidiaries contrary to the requirements of Section 45 of the Companies Act, because Section 45 of the Companies Act requires then a company to prove that after the financial assistance has been provided, the company will meet the requirements of solvency and liquidity challenges. So I think that was a challenge, because at that time that SAA was providing the financial assistance, already SAA was in financial distress. Their liabilities were exceeding their assets, meaning that the SAA was insolvent. They had liquidity challenges, and then that resulted in them, I think, in the Companies and Intellectual Property Commission issuing a non-compliance notice to SAA, specifically for the financial assistance that was provided to HFs. I think that's the one. So that is one example, Chairperson. Another example is I think there was also a board resolution that was made for the set aside of the 30%, I think, for the SMMEs, which I think the DTI, the National Treasury, have warned the board that this is the decision that the board was making was unlawful. However, the board continued to implement that decision, and we couldn't see how the Cabinet Secretary also couldn't advise the board on that. So those are the examples, Chairperson, to name a few that we had, and that made us then, as the audit team, to be worried then in terms of then what is the value then that the Cabinet Secretary's office is providing to SAA. Chairperson, the issue of record keeping at SAA was a significant concern to us. When we were requesting information for audit purposes, at times sometimes it will take 3 months for us to get information, and that was the dire situation that the state of affairs was, and this has resulted in significant limitations of scope on our side, due to that issue, especially on the areas of supply chain management and also in assets. In the assets of SAA. When we're evaluating the status of internal controls, of key controls at SAA, they indicated that an intervention was required in the areas of leadership, in the areas of financial and performance management, as well as governance. And the contributing factors to that, Chair, included the lack of properly documented policies and procedures at SAA, because what we've found out is that SAA does not have, adequate policies and procedures. There's not even a central repository where you can go and say, when I'm looking for a policy for something, I can go and find it as an employee of SAA. Some of the policies were outdated. They were outdated. They've been, the last time that were updated maybe were about 5 years ago, 10 years ago. And that resulted in a lot of challenges also on us, especially in the audit process, because what we realized was that there is no one that was accountable for anything, because at least you need to go to the policy to see what are the roles and responsibilities of specific individuals or employees in the business. So those were then the challenges then that we had. And management also were responding very slowly to our audit findings in terms of addressing our audit findings. I don't know how many engagements we had with SAA, so that was the challenge, Chair. Another area of concern, I think I've already highlighted, I'm just going to be quick on this one, is on...
Before you go to that one, let's go back to the one about record keeping.
Yes, Chair.
I would have thought that for an auditor to do his or her job properly in auditing an entity, proper record keeping on the part of the entity is crucial. That's one, because without proper record keeping, it ought to be quite difficult for an auditor to do his or her job properly. That's one. Two, you say that as part of talking about the record keeping, but maybe it goes beyond that, you say it was difficult to find policies at SAA. Obviously, when you are an auditor and you are auditing an entity, certainly such as an SOE, you are bound to have to find out, have you got a policy on this? Have you got a policy on that? Have you got a policy on that? If you have, I want to see them. Now, certainly when it comes to policies, when you came in 2016, during the 2016, for the 2016-2017 financial year, there was that problem that you were looking for policies, and SAA could not give you some of the policies, or maybe they couldn't give you any, I'm not sure. Obviously, the ones who had audited it the year before must have looked for those as well. Maybe not exactly the same, but they must have looked for some policies. And the question arises, on what you saw during when you were doing auditing 2016-2017, the 2016-2017 financial year, were you able to conclude that either your predecessors didn't ask for these policies, because if they had asked for them and they had not been given them, that would have affected their opinion? Or what was your view of what is likely to have happened during the previous year? Is it possible that they could, I mean, obviously if they asked, they were not given because they were not there. Therefore, shouldn't that have affected their opinion? If they were not given, shouldn't they have noted that somewhere as a concern? So I wonder whether you're able to comment on those aspects.
Chair, I think I just want to clarify that there were some policies. However, what we've identified in those policies is that they were last updated years ago. And you find that maybe because the business as it goes, things change in terms of how things are supposed to be done. You find that they are outdated, or they are not, or they are no longer relevant. And in some cases, for an example, you find that there are no policies at all. Yeah, I think, Chair, I think in terms of the question that you are asking, obviously, in terms of getting policies and procedures as part of the audit process itself. However, I don't know in terms of how they actually gather that information, because it was not part of the scope of looking at the opening balances for the predecessor auditor. So I don't have an opinion on that in terms of how they might have dealt with a similar situation.
But you are able to say auditing any particular financial year in regard to an entity like SAA would require an auditor to ask for various policies to see if they are in place and to see whether what they provide and whether that's fine.
Absolutely, Chair.
Yes, okay.
Absolutely.
Mr. Sokombela, before you continue, on the issue of record keeping, you mentioned in your affidavit a limitation of scope. Can you tell us what that is?
Chair, a limitation of scope is when management did not provide us with documentation. Then we are limited. We can't we can't do anything. You know, we will then just say, you limited us. You know, so, and that is not a good thing for an auditor to get limitation of scope, because our objective is to get documents, scrutinize them, so that we can have an opinion on them.
What is the explanation you got from management about their inability to give you documents? Was it that they don't know where the documents were, but the documents did exist? Or was it the documents are not there?
Chair.
Or it varied?
Yeah, Chair, I think one of the challenges that we saw at SAA was there was no discipline of record management. For an example, having a records manager, you know, somebody that we know then that is going to regulate in the entity in terms of how documents needs to be recorded, how they need to be filed, for how long they need to be retained, among those things. So it was each and every business unit would do what they like, you know. And at times, for an example, because people come and go in an organization, so you find out that maybe the current people that we are dealing with, they don't know where those documents are. You know, you may find that maybe they are available somewhere, but they don't know where they are.
Thank you. Mr. Sokombela, please continue where you were in your description of the areas of concern.
Thank you very much, Chair. Chair, one of the areas of concern that we had was the quality of the annual performance report that SAA uses to report on the achievement of its strategic objectives. We could not, it was very poor. We could not, we identified significant findings on the usefulness or measurability of their key performance indicators. And also, we couldn't determine if they are reliable or not. And this is very important for an entity like SAA that has got, for example, long-term turnaround strategies, because you would want to see whether they are achieving their strategic objectives or not. And I've already mentioned that this was due to also the challenges like key officials that were responsible for this, that lacked appropriate competencies. There was no full-time head of strategy at the business, among others. One other concern that was quite significant to us was the ineffectiveness of information technology environment and infrastructure at SAA. And we're saying that because SAA did not have a coherent information technology governance framework that would allow for effective alignment of processes, projects, and structures to support its business. One of the things that we saw there, Chair, is that the information technology department is supposed to work as an enabler to business, to enable business to operate properly. But what we saw is that there was no effective communication between the two. You know, the IT division will do its project thinking that business is going to adapt to them or utilize them. One of the things, for example, that we saw at SAA was the issue of records. SAA is using a lot of papers, but they've got one of the best ERP solutions by the name of SAP. But people were working outside with papers, you know, because I guess maybe there was no change management to say, now that we've got SAP, let's ensure then that we do all the transactions on the system itself. So those were the challenges that we had. And also the responsibility for the ICT governance framework was that of the Audit and Risk Committee. And it was mandated to implement the ICT governance framework. One of the challenges that we saw in the Audit and Risk Committee at SAA was that they did not have a technical representative that understand IT, you know. So that also makes then oversight ineffective, because you ought to have somebody then that understands in terms of the IT issues. What are the issues there in the IT? The risk management processes at SAA, they elect majority, Chair, and also the delegation of authority at SAA did not operate optimally, resulting in invalid decisions at times. And also, one of the things that we've shown is that the turnaround time for decision to be made, it was long. It was long. I think it's because of how the business itself was configured, because there's a lot of people that needs to approve something, so that took time. I remember one of the contracts, for an example, I think the contracts on the jet fuel, I think the extension of contract was approved. The extension was approved, I think, about 3 months after the date, the expiry date of the contract. So you get that tells you then in terms of how long the decisions at SAA took. The inadequate segregation of duties also was identified, especially in the areas of maintenance reserves and provision for lease liabilities. What we've detected there is material differences between the annual financial statements and the calculations, both for the maintenance reserves as well as the provision for lease liabilities, which also led to material misstatements and also changes made to the calculations that were made on the submitted financial statements. Yeah, so those were the key issues, I think, at a high level, Chairperson, that we've identified as the areas of concerns.
You may or may not be able to tell me this. Looking at where SAA was financially in the 2016-2017 financial year, including issues of liquidity and insolvency, and looking at the clean audits that your predecessors had given for the previous 5 or so years, is the financial state in which SAA was in the 2016-2017 financial year reconcilable with the clean audits that had been given for 5 successive years?
Chair, I think when we're saying reconcilable with the previous years, maybe you may need to clarify that question.
Yes. Let me put it this way. Is it from an auditor's point of view, if you come to an entity in a particular financial year and find it to be in the position in which you found SAA to be in the 2016-2017 financial year, are you able to say clean audits for the past 5 years for this entity are consistent with this financial situation in which I'm finding it the year after the predecessors have gone? Or is the position that you say there is no way, if SAA is in this financial position this year, that the clean audits of last year and the previous 5 years could be justified? Or are you only able to say, look, it's possible that all those years, those clean audits fairly represented the position of SAA? Something happened maybe during this financial year that just put it in the position that it is in. I don't know if that helps you in any way to understand what I'm looking for.
It does, Chair.
Yes.
It does. I think, Chair, what I said, I think specifically yesterday, one of the things that I said was to say whether I'm going to be able to provide an opinion on whether then the clean audit opinion that was issued by PwC and Gonki was a valid opinion, because I think one important aspect is that these were credible firms, and these firms, the Independent Regulatory Board for Auditors did not find any challenges as far as the quality is concerned. That was through our concurrences when we were concurring as the Auditor General. However, we did identify errors in the previous year's financial statements that were corrected as part of the restatement of corresponding figures. But Chairperson, what I don't know is whether then whether the previous auditors were able to identify those or not, those errors or not. So I think that is the challenge that we have.
That is the challenge.
Yeah, that's the challenge. And what I don't want to do also is to speculate.
Yeah, no.
Is to speculate.
I accept. I accept. You will see that with these questions, I'm trying to get as close a picture of SAA. Not just in the 2016-2017 financial year, but in the years before, as close a picture as you as an auditor
absolutely
were able to get.
Indeed.
You see,
Indeed.
So that's why I'm trying to look at that, because and we all know that the financial situation of SAA has been very bad for quite some time. You know,
Indeed.
So, but in order to be able to pass an opinion on the issue I'm raising, what would an auditor need to do? Would they need to do much more than the limited look that the standards, as you told me, allow you when you come in to look at, or what is it that would be needed for you or any auditor to give me answers to these questions?
Chair, I think it's important to note that as a professional accountant, I've got ethical responsibilities, especially passing a judgment on something that I do not know what the circumstances were.
Yes.
However, I think it's important maybe to mention to you, Chair, that if the situation at SAA before we took back the audit was the same as the situation that we found SAA to be at, then you would have expected then that the previous auditors have identified those findings, have reported those findings, and maybe perhaps the audit opinion shouldn't have been clean.
Yes.
I think that is the closest answer I can
that
be
you
able
can
to provide.
give. Yes. No, that's fine. And what would the Commission need to do to establish whether the position that you found at SAA when you came in was the same or was different when they came in? What would we need to do if we want to do that? Because we are committed to being fair to everybody.
Absolutely.
But we need to understand and to do a proper job.
Thank you, Chair. Chair, the regulator for the auditors, which is the Independent Regulatory Board for Auditors, is the one that has got a mandate to review those
Any work
fines.
done, yes.
Yeah, those fines.
Yes.
And they are the ones then that can be able then to provide an opinion, whether then those opinions were fair opinions or not.
Okay.
Yes.
No, thank you.
Thank you, Chair. Can I, following from that, just ask one question of clarity? Because I understand your evidence from earlier to be that at least in two respects, your audit opinion does make a judgment of the prior year's audit work. The first is in respect of the opening balance. The closing balance, which is carried over from the previous audit year to your own. Is that a correct assessment?
No, that is not the correct assessment. The correct assessment is that was ourselves we did not satisfy. We were not satisfied with what we saw in the audit file of the previous auditors. However, we did not pass judgment. Instead, what we did, we performed additional procedures at SAA, and in some cases, we identified significant findings that resulted in the prior year figures being corrected. So I think it's important to understand that, to say the reason why I think it was at the mercy of the previous auditors for them to allow us to go to their audit file. If they liked, they might have said, no, we don't want to give you access. So, and we're very clear then to say we just want to get this access so that we can see what is it that we can rely. What is it that perhaps if we don't rely, then we need to go back to SAA and perform additional procedures on.
Yes.
Sorry, Mr. Sokumbela, it may have been the fact that I used the word judgment, which was an inappropriate one to use. What I meant to ask was that in your findings as to the opening balance, you were yourself making a finding as to the closing balance of the prior year's auditors based on the circumstances that prevailed at the time for them.
Chair, I've made the findings on the closing balance based on the additional procedures and the evidence that I got at SAA, and the evidence that I got at SAA were at the time that the previous auditors were there.
Yes.
Because we had to go back memory lane, and for them to give us evidence. In some evidence, they could prove certain things, but unfortunately, in some instances, there was non-compliance with the audit, with the accounting standards.
Yes. So, in regard to that, you knew what position they had found SAA, and you knew that it was the same as the position you found it, and then you were able to say, we need to correct something.
Absolutely, absolutely.
Thank you.
And the second respect was the restatements that you spoke about earlier, where you restated the financial statements from prior years. Is that correct?
The management had to restate the financial statements.
Yes.
Otherwise, the audit opinion could have been worse.
Yes.
If they didn't restate those prior year statements.
Well, if when you came there was no restatement, restatement was done at your instance, is that right?
I can't remember.
Yes.
You know, whether there were any restatement of corresponding figures.
Yes.
In the 2016-17 financial year. There may be one or two.
Yes.
Restatement of corresponding figures.
Yes.
Yeah. So I can't necessarily remember if there weren't any. But what I want also to specify is that the restatement of prior years is acceptable in the profession.
In terms of standards.
In terms of standards, there's even an accounting standards that says if you find that there are errors in the prior years,
Yes.
this is how you need to deal with them. This is how you need to disclose them.
Yes.
Yes,
Yes.
yes,
Yes. What made restatement to be necessary? Was it not a situation that logically must have existed when your predecessors were doing their audit?
What made the restatement, Chair, is that because people that are preparing financial statements, sometimes they make mistakes or they make errors in that sense. So you may find that some of or maybe there may be different interpretations, or they might have interpreted the standard wrong. Let me make an example of where, for example, we found out that how they interpreted the standard was wrong. Was SAA had a subordinated loan with Nedbank of about 1.3 billion rands. And how then that subordinated loan was treated in the financial statements, it was treated as an equity instrument as opposed to be treated as a debt instrument. And when as part of the opening balances, when we're reviewing the decision to classify this loan as equity, and even the interest that was paid to Nedbank at the time was classified as dividends, as dividends, as opposed to be classified as interest paid, in the financial statements. We realized that was not in accordance with the international financial reporting standards, and management then had to reclassify that loan from being an equity instrument to being a debt instrument.
Okay, so hence your comment that your predecessors may have been faced with the same situation, but their interpretation of the standards may have been different from your own interpretation.
In that specific scenario.
In regard to that specific.
In that specific scenario, that's what I determined.
Yes.
However, in other scenarios, I don't know what might have caused them not to.
Yes.
But in that specific one, because we looked at that one, there's a lot of consultations that we had to do.
Yes.
On our side as well, to arrive at a decision to say,
yes,
reclassify the 1.3 billion not to be part of your equity. It's not your equity.
Yes.
It's a debt instrument, meaning that it should form part of the loans that you have.
Yes. Okay, all right. So, but you say others, you couldn't.
Yeah.
You couldn't tell what led them to the decision conclusions they reached.
Absolutely.
Okay, thank you.
Thank you, Mr. Sokombela. I'd now like to take you to the final management report that you referred to. You'll find that in DD 20B at page 572. Are you there?
Yes, Chair.
Can you start by telling us what this document is and what its purpose is?
Chair, this is the final management report of South African Airways, SOC Limited, for the 31st of March 2017 financial year. And the purpose is to communicate significant findings to management and those charged with governance, so that they can be able then to address any deficiencies that we've identified, and also for the audit committee to be able to hand over to the internal audit to make a follow-up on some of the findings that we've addressed.
If you have been auditing an entity as an auditor, would you always have to have a management report that you put in, or is the decision to do a management report dictated by the fact that you have made certain adverse findings or certain findings that you feel justify putting together a report that will be given to management?
Chair, the management report is a requirement that it needs to be provided to management.
Irrespective of what findings you have made? Irrespective
of what findings they've made. I think other firms, they call it a management letter.
Okay, yes. Okay. Which therefore means that if we want to look at what your predecessors may have picked up or not picked up for the previous financial years, we look at their management report to management.
Absolutely, Chair.
Yes, okay.
Thank you, Chair. Mr. Sokumbela, if you turn over to page 577. I'm concerned that it looks like you're looking at a different page to me.
Your eyes are very sharp, I must say.
577, which says overall message at the top.
Absolutely, Chair.
This is the kind of summary of the issues that you've basically just talked us through. Is that right?
Absolutely, Chair.
I'd like you to turn to page 618 of the management report, please.
Well, maybe let's, for the sake of completeness, let's place on record that the management report starts at page 575 and goes up to what page?
Chair, it's a little bit complicated. It goes up to 649.
Yes.
But that is...
I just want whoever reads the transcript to know.
Indeed. So let me explain. It goes up to 649, except for annexures A to C.
Yes.
Annexures A to C are the detailed audit findings.
Yes.
In total, it runs to 720 pages. Those are contained in file DD20C
Yes.
from page 950
Yes.
all the way through to DD20D
Yes.
at page 1591.
Okay, so the management report with its annexures starts at 575 and
572, Chair.
of 572 of DD20B up to what page of what leverage file?
Up to DD20D at page 1591.
Okay, that's fine.
Thank you. Chair, I see we have reached 11:15.
Yes, let's take the short adjournment. We'll resume at 11:30. We adjourn.
All rise. description.
And description would have been for that first column.
For that first column, Chair, yes.
Oh, okay. And yes, so maybe that's part of what's confusing me. Okay, and total there is supposed to be total of what?
The total there is supposed to be the total of quotations and contracts.
So quotations and contracts is a breakdown
Yes.
of what's contained in the total column.
Absolutely. So if I'm saying,
Yeah.
for an example, if I make an example, Chair, you'll say there, I said awards selected for testing.
Yes,
The total is 140,
yes,
and the value is 7.6 billion rands.
yes,
But if you go to quotations, the number is 44, and the value is 11.7 million. And if you go to contracts, it's 96, and the number is 7.5 billion rands.
yes.
So the 140 is 44 plus 96.
Oh,
Then it will give you 140. Yeah.
it goes back to what I was talking
Yes.
about. I would have expected the total to be
On the furthest right-hand
That's
column.
right. Maybe I should ask, are you left-handed?
No, I'm not left-handed. Maybe my brain is left-handed.
Okay. Okay, so now the quotations, are those quotations that relate to the contracts dealt with in the extreme right column, or do the quotations relate to different transactions?
Quotations, Chair, what SAA has in its supply chain management policy has got threshold where, for example, goods and services that are below 500,000, they don't go to an open competitive tender.
Yes. Yes.
Then they will just maybe request a minimum of 3 quotations.
Yes, yes.
So we test those as a separate population.
Okay, okay.
Yes.
So in other words, you have 2 columns here.
Yes,
The
Chair.
one column deals with contracts.
Yes, Chair.
The other one deals with situations where there were quotations but no contracts. Or not necessarily.
Not necessarily.
But-
Maybe that word contract should be assumed contracts/tenders, because
Oh,
those
yes.
will be the big ticketing
Yeah,
items.
So
Yes.
the contracts one relates to those that were supposed to have gone out to open tender,
Absolutely, Chair.
and the quotations refers to those transactions which were below 500. Is it 500,000?
I think the threshold was 500,000.
Yes.
Chair.
So that's what quotations deals with.
Absolutely.
Okay, all right. So if I want to look at anything relating to quotations, then I have to look on looks like the first 2/3 of the columns,
Absolutely.
and then the last third deals with contracts.
Absolutely, Chair.
Okay, all right.
Absolutely.
I think I understand it now.
Yes, Chair. Thank you. Chair, then that table then, for an example, we showed there in that table that the number of awards that were selected for testing, and we also showed there the expenditure that has been incurred on the selected awards in the current year, which is the current year was the year which is 2016-2017. i.e., if you look at the awards selected, for example, 7.6 billion rands. So our calculations are that out of that 7.6 billion rands,
Oh,
3.4
those are billions, eh?
is
Those are
billions.
billions, indeed.
Yeah, everything we're dealing with here is billions, it seems.
Not necessarily.
Not
Chair.
necessarily.
For example,
Chair, not the quotations
Yeah.
column, because
Yes.
as Mr. Sokombela has said, that's
Yes.
where the value was low. So that's
Yes.
only 11.7 million.
Yes.
But the contracts column is 7.5 billion, because those are,
Yes.
as you said,
Absolutely.
the big
Yes.
ticket items.
Thank you, Chair.
Yes. Okay, all right, yes.
Yes. So, Chair, what I was saying is that where we will say expenditure incurred on selected awards in the current year, based on the information that we gathered, was that out of that 7.6 billion rands, 3.4 billion rands was already incurred in the current year. And that helps us to identify whether if there's non-compliance or there are transgressions on the awarding of those quotations or tenders, whether maybe there may be irregular expenditure or not.
Oh, okay. So the value of the 140 quotations that were selected was 7.6 billion rand.
In total, yes, Chair.
In total, all of them.
Absolutely, Chair.
And then there was 3.4 billion rand expenditure, which was incurred during that particular financial year, or not necessarily during that particular year.
It's cumulative.
It's cumulative.
Because some of the awards we might have made in the prior years, but the contracts are still effective.
Okay.
Yes.
Okay. No, I understand.
Absolutely.
Yeah.
Absolutely, Chair.
Okay.
Yes, Chair. Then on the next one, Chair, is the limitations that were imposed to us on the hours that were selected. For an example, where we selected specific contracts or tenders where we were not given, there you will see, Chair, that the limitations that were imposed on us were 4 contracts at a value of 279 million rands.
Yes.
And then, Chair, the next one we've got awards on which non-compliance was identified.
I'm sorry, before you proceed, did you get to know what percentage of the quotations 140 was? So in other words, you looked at 140 that you selected, that was not all. But
Absolutely.
did you know whether that was about 50%, that was about 10%, that was about 80% of the quotations for the relevant period?
I don't have that statistics, Chair.
You don't
I don't have that statistics, yes.
Yeah, because I'm just wondering if the limitations that related to 4 quotations produced or the value thereof was 279 million. If you knew what percentage 140 was of the total quotations, one could have an idea of how much maybe we could be talking of. If it was 50%, we could be talking about half a billion rand. Okay. All right.
Thank you, Chair. Chair, the next one is award on which non-compliance was identified. Because after we've selected these awards, we did test whether they complied with the legislation, supply chain management policy or not. And what we found was that 121 of those awards to a value of 6.6 billion rands were not
compliant.
Were not compliant with the supply chain management policy and laws and regulations. And if you look at
maybe let me ask this about those. Do you have any recollection, or is it something that you will be able to find in your report, whether the nature of the non-compliances related to serious non-compliances, or whether it might have been just technical non-compliances, and to get a picture as to maybe more than 50% of the non-compliances were situations where there was no compliance at all.
There's a lot of those, Chair.
Yes.
If I may.
Yes.
Because in the audit report of SAA as per the annual report, we have disclosed then in terms of what those non-compliances were. And Chair, those non-compliances range from the issue of SAA not going through an open tender, for an example, confining the procurement processes. And that we found that was contrary then to Section 51, subparagraph 1, paragraph A, Roman figure 3 of the Public Finance Management Act, because that was not competitive or equitable and fair in terms of how they dealt with that. Other non-compliances that we've identified, Chair, is situations whereby awards were made to contractors where the tax clearance certificates from that were confirmed by South African Revenue Services were confirmed, and others were situations whereby the preferential point systems that were not awarded in terms of the Procurement Policy Framework Act. I think they call it the PPFA. Some of the awards were awarded based on the calculations of points that were not in terms of the original or the original bid documents, in terms of how they were going to calculate the points to award the tenderers there. And some of the awards, for example, were awarded were for the suppliers that did not score the highest points, for the tenders. And also there were some awards also that were awarded. However, the criteria that was applied to evaluate those tenders differed from the criteria that was in the original bid documents. So, among others, those were the type of non-compliances that we've identified.
No, thank you.
Chair, I was still taking you through the table itself.
Yes.
So what I was saying is that about 121 contracts with a value of 6.6 billion rands, we found that there was non-compliance. And however, in the current year, I think approximately about 103 where we could classify those ones as irregular expenditure to the value of 2.6 billion rands. Chair. So that is then the table. Chair, I don't know, Chair, if you want me to go through each and every other number.
Mr. Mpigiwa?
I don't think that's necessary, Chair, because the total is a combination of both the quotations and the contracts.
Yeah.
I just do want to ask what the difference is between non-compliance and irregular expenditure.
The difference between, in actual fact, there is no difference between the two. But because if there is non-compliance, that may result in irregular expenditure. But you may find out that the reason why maybe not the whole 6.6 billion rands has been declared as irregular expenditure is the fact that the expenditure has not yet been incurred.
In that financial year?
In that financial year, yes.
Thank you. So as you've just described, of 140 contracts that formed part of your sample, 121, sorry, not contracts, both quotations and contracts that formed part of your sample, 121 were non-compliant and 103 resulted in irregular expenditure. Is that correct?
Yes, Chair.
That's 86% of tenders, of contracts and quotations in that year, which were non-compliant with the SCM policy.
Chair, if you extrapolate, because I'm assuming then that is an extrapolation to the sample.
Sorry, 86% within your sample?
Absolutely.
Yes,
Chair.
yeah. Of the sample.
Of the sample?
Yes.
Indeed.
And it could be worse, it could be better, depending on what you find in terms of those that were not selected as part of the sampling.
Absolutely, Chair.
Yeah.
Are you able to say whether it's representative, whether a sample of 7.6 billion rand in value is representative?
I think it's representative because I think the state of non-compliance with supply chain management policy legislation at SAA is the non-compliance is very low there. You know, I think in most instances.
Well, well, before you said very low.
Very high. I'm sorry.
Maybe it's two negatives. Well, I was wondering whether you were going to say it's horrible.
Yes, Chair.
It is horrible.
It is horrible, Chair.
Yes. Okay. Thank you. Well, excuse me. I go back to my earlier probing. If in the 2016-2017 financial year, you found that out of 140, a sample of 140 quotations, transactions based on quotations, 121 were not compliant with the laws and what. How would it be possible that your predecessors could not have picked up even 10 out of the 121? Because I take it if they had picked up the 10 out of the 121 that you found, or a similar percentage, even if they didn't go to the same, I would imagine that they would not have given a clean audit. And you must just tell me if I'm misunderstanding things because I'm not an auditor. But that's the kind of question that comes to my mind. If you take 140 transactions and you test them in terms of compliance, and you find such a high number, 121 not compliant, and if I'm right in thinking that a clean audit means that your predecessors didn't find any non-compliance, how is that possible? And again, you must just tell me if you say, Chair, you are not an auditor, I can see. So that's why you don't understand this.
Yeah, Chair. I think this is an area that I think as part of us requesting access to the predecessors' auditors' files, where we agreed with the previous auditors, because there was not much work that was done there. And we agreed with them that on our side, we're going to basically start from scratch, you know, because we wanted to see in terms of how much work they've done on supply chain management. But based on the feedback that I received from my team, and also the engagements also that we had with the predecessor auditors, you know, there was not much work that was done in that space.
You say you discussed the issue with them, and they agreed that they had not done much work in regard to that.
Absolutely, Chair.
Yes. Would that, what would not doing work on this kind of thing do if one were to look at how the audit was done? I mean, would one be able to say we did a good job? They did a good job if they didn't do this? Or is the position that, well, really, if you didn't do this, you can't be said to have done a good job? Or is the position that, look, it's not a good reflection on them, but that's how far one can take it? Or is the position that you say, well, these things do happen, you know, even to the best auditors, So it's just that for me, to find that 121 of 140 transactions that you looked at were non-compliant, that's a very high number. And that's why I was thinking you were going to say it's horrible, and you did describe it like that. And if there was something so horrible, even in the previous years, how could it not have been picked up? Or was it a question of maybe a professional judgment made not to do this kind of work, and that's why? If you say, look, I can't explain it, feel free to say so. If you say, look, I do understand, I just want to see how I must look at this kind of thing.
Chair, I think what I can say on my side is that we try by all means to ensure that we give guidance.
Yes.
To the especially the auditors in private practice.
Yes.
In terms of testing, how to test supply chain management. Because if you remember, Chair, yesterday, one of the things that we talked about is the difference between how public sector auditors or government auditors do the audit work and then private sector auditors.
Yes.
And what I said there is that when it comes to compliance, we are big on compliance. And one important issue then to mention, Chair, is that because we know then that when it comes to compliance, we're big, there's a lot of guidance that we provide when the auditors in private practice are doing the audit of state-owned entities. We even gave them the working papers that we use that has got the same procedures that we execute to ensure then that they are able to pick up the issues. And we even, because what we also do, because in the audit of supply chain management, the audit office is quite advanced, because we are able also to even do the background checks using third-party data. So that is the service also that we offer to them. For an example, they will get the data from the state-owned entity, they give it to us, then we'll run computer-assisted audit techniques, we call them CATs. We'll run CATs for them, and those CATs will come up with conflict of interest, will come up with duplicate payments, will come up with a lot of things so that they can be able then to be empowered to execute the audit of supply chain management successfully. And also there is a lot of technical guidance memorandums that the audit office produces on a regular basis that also gets given to the private sector firms, and also it's available in the website of the Auditor General. At times as well, we would have, for an example, a workshop. We would workshop them. We're calling it we also call it a Section 4.3 workshop, where all the auditors of state-owned entities that are from the private sector firms will come so that we can workshop with them, specifically on the audit of supply chain management as well as the audit of performance information, because those are the areas that we understand that maybe they may not have the technical expertise.
So your predecessors, Price, Waterhouse, and Konki, they knew of the availability of that assistance.
Absolutely.
They would have known about its availability.
They knew, and
Yes.
even some of the information, for an example, I would meet with them and give it to them.
And give it to them.
Absolutely.
So if there is any part of the job that they didn't do or didn't do properly, it can't be because there was no assistance available if they needed it.
Absolutely, Chair.
Yeah.
Absolutely.
But also, you mentioned earlier on that Price Waterhouse is a big auditing firm, and and you talked about its reputation and so on. If one has regard to its size and its reputation, and you might even know a lot about the skills they have, the expertise they have, then one is entitled to look at the work done against the kind of expertise and that one expects from a firm like that. So if one has regard to that, it may be that it's difficult to understand why this was not done. Would that be a fair comment, as far as you are concerned?
Yeah,
to say the least.
To say the least, I think it is difficult to understand that.
Yes.
I think also one other important aspect is that maybe people would say, especially the firms would say, maybe this is the speciality of the AG, as maybe we are good in auditing financial statements. Maybe that's where maybe our most of our energy is going to be. And I'm speculating here, Chair. I'm just speculating in terms of, yeah.
But of course, the answer to that is you shouldn't take work that you don't have the capacity to do, and you shouldn't take work that you don't have skills or expertise necessary to do.
Absolutely, Chair.
So that's the one part. The second part, probably that kind of explanation can't avail a firm like Price Waterhouse. Even, I don't know whether when it's a joint appointment, as it was for those years, it's possible for the one partner to say, well, no, that one was done by so and so, by the one we were jointly appointed with, so I'm not responsible. I don't know whether that's possible. But even then, I don't know whether it would avail Nkonki to seek to explain this by way of lack of any experience or expertise or capacity. I don't know. Are you able to say anything about this?
I think, Jay, like you said, I think this, I said yesterday, the PricewaterhouseCoopers is a global firm that has got professionals. At the time when Nkonki was still available, was still in the space as well, was a medium-sized firm. And also then the people then that were entrusted with the audits were seasoned professionals. And there were people then that where I'm sitting, I wouldn't doubt that they knew what the right thing was in terms of what they were expected to do.
Well, that's all very important for this commission's inquiry, because where something was not done properly, one of the things one would look at is whether that was a result of incompetence, or a result of negligence, or a result of lack of appropriate expertise, or whether it's something much more than that, whether people were aware of what they were supposed to do, they knew the true position, but for certain reasons did not want to do the right thing. You understand?
Absolutely, Chair.
Yes. Okay, thank you.
Thank you. Mr. Sokumbela, I'd like to take you to an aspect of the detailed audit findings attached to the management report.
Absolutely.
Can I ask you to go to file DD20C?
Should I close the one with the report, or we'll come back to it?
We will come back to it at some point, Chair, but not for the time being.
Now.
You can close it for now.
Okay.
And can I ask you to go to page 1104?
1104.
Yes. This is titled Lack of Effective and Appropriate Steps to Prevent Irregular and Fruitless and Wasteful Expenditure. And there are two tables. A.
Before you proceed, is this another report or is it part of the report we were looking at?
Chair, it's an annexure to the report we were looking at, and it was
Yeah.
included in the page numbers that I gave
Okay.
you
I
earlier.
think we must just identify it properly for the transcript.
Indeed.
Yeah.
Chair, this is the detailed audit findings attached to the management report.
Where does this particular annexure start from?
The annexures,
This page is, I take it, part of an annexure that starts from somewhere.
it starts
Yeah.
at page 950, Chair.
Okay. Yeah. I think for the record, if you just state that so
Indeed.
that whoever reads the transcript knows.
Yes, it begins at 950, and we are at page 1104.
Okay. Does the particular annexure have a particular title or anything like that?
Indeed, Chair. The
Let's
title is,
specify all of that.
yes, the title is Annexure A, Matters Affecting the Auditor Report, Financial Statement Related Findings,
Okay. And you said it starts from 900
950.
and it goes up to?
The Chair, I need to check where
Up to where
A,
it
B, and
goes.
C specifically begin. I know where C go. I know where the three annexures end.
Yes. Okay, no, that's fine.
Oh no,
But-
sorry. I do have it.
Uh-huh.
It ends at 1171. Annexure B begins at 1172.
Yes, okay, no, that's fine. So with every page that we're going to, it's important that we know if it's part of a larger document.
Certainly.
What that document is, where it starts from, and up to where it goes.
Certainly, Chair.
Okay, all right.
Mr. Sokombela, can you explain to us what these two tables represent?
We are now back at page
Sorry, we're back-
1104.
1104, Chair.
Yeah.
Chair, these two tables, what these two tables represent is that the first table represent what management has disclosed in the financial statements or the annual report. You would say that, Chair,
Is that the one saying type of expenditure?
there's one table that has got two, number one, number two. only,
Yes.
Where number one is fruitless and wasteful expenditure.
Yes, yes.
Current year, the
Yeah.
value is 40.4 million. And then the other one is irregular expenditure. Current year, the value is 125.9 million.
Yes,
Absolutely, Chair, with a total of 166.3 million.
yes.
So Chair, that is then the table that we were demonstrating in terms of what management has identified and reported in the financial statements themselves. However, in table B, Chair, where we are listing then the number of the findings that we've identified
Yes.
as the audit office,
Yes,
where then we have identified through the selection that we've done our own irregular expenditure as well as fruitless and wasteful expenditure.
yes,
If you look at that table, it has got from the left-hand side number, description of finding raised. The other column is irregular expenditure. The other column is fruitless and wasteful expenditure. The last column is the communication number. That communication number is when we issue the findings to the auditee,
Yes.
we gave it a number to say it's communication number 5, number 15,
Yes,
number
yes.
98, or number 100. So this is then the conglomeration then of the findings that we've issued to to SAA that either has resulted in irregular expenditure or has resulted in fruitless and wasteful expenditure, Chair.
And if we go over the page to 1105, can you tell us what the totals in respect of each of those were?
Chair, the total for irregular expenditure is 4.5 billion rands worth of irregular expenditure.
Yes, maybe you, just for record purposes, you could give the exact amount.
Chair, the total amount for irregular expenditure is 4 billion 521 million 956,053 rand 46 cents. I hope I read that properly.
Spot on.
Yes.
It was spot on. Okay.
Well, if an auditor can't read it properly, then nobody can. Yes, okay. Then fruitless and wasteful expenditure.
The value of fruitless and wasteful expenditure, total value, Chair, is 300 million 684,621 rand 61 cents.
Yes. So if you put the two together, then you are at about 4.8. Is that right?
Absolutely.
About 4.8 billion rand.
Absolutely, Chair.
Putting irregular expenditure and fruitless and wasteful expenditure together. And that this is not necessarily the true picture, because whatever you were doing was based on samples.
Chair, this is not a true reflection.
Yes.
Because, like I said yesterday, we select samples. Management then is required to go and look at the whole population and come back to us and say, we've looked at the whole population, you've identified 4.5 billion, we've identified 10 billion, for an example. Then we'll perform our own additional procedures to test the credibility of that number that management comes with it to us. And if then it's okay, then we will agree, then they will disclose in the financial statements if we agree, then it may not result in a qualification. But in this instance, management couldn't, they did try to go and revise to the whole population. But unfortunately, they were faced with the same challenges that we're faced with. And they considered, hence, if you look at the financial statements, the value that is disclosed there in that table, that first table, Chair, of 125 million for irregular expenditure and of 40 million for fruitless and wasteful expenditure is because management said we're going to be qualified anyway. So why bother to update the disclosure?
That must be irresponsible, isn't it? Because as management, you must want to know the full extent of the problem. Tell me if I'm being too harsh. I mean, if auditors come and say, you have a serious problem, but we can't tell you the true position because we work on samples. But if you look at what we have found, even based on samples, it's terrible. You would have to go and say, I really want to find out the full depth of the problem, because what may need to be done, must be decided upon on true facts. And I don't think it should be the right approach to say, oh, we'll get a qualified opinion anyway, so it's fine. Am I being harsh on them?
You're not being harsh, Chair. However, is whether it was practical for them to go, because the magnitude of the problems were big. Earlier on, I reflected in terms of the challenges that we faced with the contract management system. In terms of then the contract management at SAA is a big problem. It's a mess. I can safely say it's a mess, basically, because the contract register itself, we're not satisfied whether it's complete or not. Yeah, Chair. So for them, I remember they started, I think, to go to the whole population. I think somewhere in September, if I'm not mistaken, of 2017. We signed the audit report by December. But after about 2 weeks of them, because I remember they even developed a checklist in terms of how they're going to go about. And that checklist, I think the head of internal audit at SAA was requested by the audit committee to assist management to do this exercise. However, after I think about 2 weeks of performing that exercise, for an example, management, there were certain contracts that they couldn't find. There were certain, documentation, even in the tender documents, that they couldn't find and account for. And they considered and said they need more time for them, not only a month or 2 or 3, but they would need to actually have a dedicated team that would look into that and come up with a credible amount. So you can see then that it was the problem there was systematic, as opposed to say maybe it's a mistake of someone. It was a systematic issue that couldn't just be corrected, within a few weeks or so.
Yes, that may be so, but certainly, how are you going to correct a problem if you don't know how far it goes? That's my concern. So that's part of my concern. But I go back to my question. It's difficult for me to think that SAA suddenly, out of the blue, in the 2016-2017 financial year, found itself in this mess that you have told me about. And that the other years when they were being given clean audits by Pricewaterhouse and Konki, there was no mess. What do you say to that? I'm finding it difficult to think that they were in this mess, in what you described as a mess, in 2016-2017 financial year, just out of the blue in this financial year. But the other years, everything was fine. There was nothing anybody could pick up and say there's a problem here.
Actually, I must say, our audit work at SAA, including the audit work that we've done in supply chain management and the audit of financial statements, and the audit opinion that we expressed is appropriate. And also, it's difficult for me to answer, I think, your question in terms of why this thing, because I think for us, that's what we found when we get there. We found that things, it was a mess, basically.
Yes.
It was a mess, yeah.
But you must be able to say to me, looking at the mess that we found, logically, that mess must have been there at least, or half of it, the previous financial year.
Absolutely.
That you can say.
That I can say, Chair.
Yes.
Because that mess was systematic, basically. Because you can't have a systematic issue this year.
Yes.
Surely it might have been the way that things have been done at SAA for quite some time.
Yes.
So that is because even for them, because if it was the problem that was only started that year, they were going to be able to correct it immediately.
Yes.
But if it's a accumulation of problems from the prior years, then it may be very, very difficult for them to think that they're going to address it immediately.
But let me see if you are able to go one step further. We talked about the previous financial year. Are you not able to say even the year before that, this mess must still have been there? Or at least half of it or something like that?
And Chair, this is my opinion.
Yeah.
You know, it's my opinion in terms of, because when I looked at the challenges that those guys had there, they were not challenges of that year.
Yes.
They were challenges that are coming from prior years.
Yes.
You know, and you can see even the culture.
Yes.
You know, when you look at the culture, this is how things are done here. You know, so.
And it was a wrong way of doing things.
Absolutely, it was the wrong way of doing things.
Yes. Is it not true that a clean audit for the 2015-2016 financial year, when, in your opinion, this mess must have been there, is not a true reflection, or could not have been a true reflection of the position at SAA?
Chair, I think, like I said, I think the most important thing for us to be able to get a credible opinion on that
is to go to the board.
Maybe is to go to the independent regulatory
Yes,
board for
okay.
auditors to find out whether then, because myself where I'm sitting, I'm very careful of saying maybe perhaps this is what they should have done, because the board may come and say, in actual fact, we've looked at their work and that clean audit opinion was appropriate.
But of course, you ought to be able to say, in my judgment, in my opinion, my professional opinion, what my colleagues from that firm found when they said SAA deserved a clean opinion was not justified. Whether the board agrees with you or not, that's that. You are giving your opinion. If they come and say, no, that was excellent, that's their own opinion, and you can disagree with them. Just because they are the board doesn't mean that you have to have the same opinion as them. Having said that, it just seems to me that however you put it, and of course Pricewaterhouse will come at some stage and put its side of the story, but as I sit here, it just seems to me that unless one finds an explanation, one is given an explanation that makes sense, just seems this mess you're talking about, which you found in the 2016-2017 financial year, which you have said, and I think you must be right, must have been there in the previous financial year, in respect of which a clean audit was given. It just seems that it's incompatible with people who had done a proper job in auditing. Now, I'm not an auditor, but I'm listening to what you are telling me. You are an auditor. It's just difficult to understand that in an entity where for 5 consecutive years an auditing firm gives a clean audit that's consistent with, or rather the mess is consistent with what one would expect in an entity that gets a clean audit. You understand what I mean?
I do understand, Chair, and what I can say is that on my side, the concern that I had was, where the predecessor auditors considered that there is not enough work that we've done
Yes,
on supply
yes.
chain management,
Yes,
and you don't
yes.
even have to look at that. Go and
Yes.
do your own work.
Yes.
You know, so for me,
Yeah.
that is a concern.
Yes.
You know, maybe
Yes.
perhaps if they still gonna come and maybe tell you, you know, in terms
Why
of
they
maybe
didn't do that part.
why they didn't do that part, or maybe tell you how they've satisfied themselves
Yes,
into
yes.
that. But in terms of the engagements that myself I had with them, that is basically then what they told me.
Yes, they considered that.
Absolutely.
Yes. But would it, maybe I've asked you the question. For you, it's, as an auditor, it's difficult to understand why they didn't do it.
It's difficult to understand.
Okay.
We will, of course, hear from PwC later today. Mr. Sokumbela, I'd like you just to go to page 1105. It should be just over the page from where you are, if you're not on it.
1105.
1105.
I'm there.
And just read the last three, those three paragraphs under the table, because that, as I read it, does involve some reflection on the prior year's audit.
There is non-compliance with PFMA as irregular and fruitless and wasteful expenditure was not prevented. The table above with a list of findings relate to irregular, fruitless and wasteful expenditure is not a complete list, and some of the findings raised have not been assessed for auditor's conclusion due to management comments being outstanding that may result in a okay, I think maybe there's
Yep.
maybe
In a
it was-
change of our
it
assessment.
was supposed to be in a change of our assessment.
Yeah.
There. Thank you, Chair. Furthermore, the amount of opening balance relating to irregular and fruitless and wasteful expenditure is incomplete due to awards made in the prior years that were identified in the current year as irregular or relates to fruitless and wasteful expenditure. Management must quantify the expenditure and adjust the opening balance for irregular and fruitless and wasteful expenditure, as this may affect the audit report if left unadjusted.
Can you just explain that last paragraph to us?
The last paragraph, Chair, what we're saying, because when we're selecting the tenders, there were tenders that were entered into in the prior years that were still active in the year that we're auditing 2017. So when we tested then those tenders, we find that there were non-compliances that resulted in irregular expenditure. So in terms of the irregular expenditure guide from Treasury, there's a certain way then that expenditure needs to be disclosed. Meaning that we're saying then that restate the 5 million that you disclosed for the prior year with the additional irregular expenditure that you ought to have disclosed in the prior years. So that was our instruction to management at the time, because what we were cautioning them, if they don't do that, then that is going to result then in us modifying or qualifying the audit report.
What did you say the amount of irregular expenditure was in the prior year?
Was about 5 million, 5.4 million or so. I don't have the exact figure.
No, that's
but
right. That's exactly right. It was
Yeah.
it was 5.4 million.
Yeah.
So 5.4 million in the 2015-2016 year. Your sample that you've taken us through, you've shown us irregular expenditure there of 4.5 billion. Is that right?
Absolutely, Chair.
Now, the 5 million or so irregular expenditure the previous financial year, is that as per the determination of your predecessors, or is that as per the determination of management?
I can't remember that, Chair, whether it was identified by the previous auditors or by management. But management do identify irregular expenditure as well and disclose it.
Yes.
However, I can't remember this one, whether it was because of the previous auditors or it was because of management.
Because it would be, okay. Is it possible to have a clean audit if there are serious, maybe I shouldn't say serious, if there is irregular expenditure?
It depends. It depends, yeah,
on
because
the amount.
it depends, for example, on the amount, because we've got a way of evaluating, because irregular expenditure in its nature is qualitatively material. However, then there are certain factors that we look into to arrive at a conclusion to say it's material that the non-compliance can be escalated to the audit report or not. And one of those factors is, for example, is there a trend? For example, they may incur irregular expenditure of 5.4 million this year, but you see that they made a mistake here and there, so maybe
Nothing significant.
Yeah, maybe this year, okay, let's see, maybe it was just a spare of a moment. But then if next year again they incur the 5.4 million again, you're gonna say now there's a trend now. Meaning that your controls are not effective enough to prevent this irregular expenditure. Normally then we'll then escalate then that non-compliance to the auditor's report to say the accounting authority or the board did not take effective steps to prevent irregular expenditure or fruitless and wasteful expenditure. But we don't just say the moment you incur it or immediately it goes to the auditor's report. We look at the qualitative considerations as well. What are the qualitative considerations to arrive at that?
And what about fruitless and wasteful expenditure?
Same
Can
principle.
you have fruitless and wasteful expenditure and still have a clean audit?
It's the same principle, Chair.
Yes.
Because also we do look at the nature of that fruitless and wasteful expenditure as well. For example, you may find that they've got fruitless and wasteful expenditure because due to late payments of suppliers, then they will incur interest there. And then you may find that maybe the situation does not allow them to pay these creditors on time. Even though it's still fruitless and wasteful expenditure, we may assess it and maybe arrive at a conclusion to say maybe it's not because they are irresponsible or anything. Maybe it's because maybe they don't have money. But you may find that there is another fruitless and wasteful expenditure whereby it's just people are just wasting money. Then that one we can escalate to the auditor's report.
Yes, I was about to ask you because you remember we had a discussion about the difference between fruitless and wasteful expenditure and irregular expenditure.
Absolutely, Chair.
Because you remember the example that I made to you. What remains in my mind is that if it's fruitless and wasteful expenditure, it means that you are wasting money.
Absolutely.
You didn't pay this money for any value that the entity got for that money.
Absolutely, Chair.
So now, if that is correct, it's difficult for me to understand why you could have a clean audit if there is wasteful and fruitless and wasteful expenditure, unless you say to me, if it's a very small amount, it might not affect the opinion. But if you have a significant amount, and we know that would be relative to each entity, if you have a significant amount of fruitless and wasteful expenditure, I don't see how you could still have a clean audit. That's how I'm looking at it. What can you say to that?
No, I agree with that, with your interpretation, Chair. Yes, I agree with that. I must say, I think SAA, when it comes to fruitless and wasteful expenditure, one of the things that trips them a lot is the immigration penalties. For an example, the jurisdictions that they fly into. If, for example, they fly a passenger to, let's say, to Brazil, but the passenger does not have a visa to go to Brazil, then Brazil will say, you're going to take this passenger back to where you took with your own cost. So those are the types of fruitless and wasteful expenditure. And we were very clear then to SAA to say they need to put mechanisms in place to ensure then that they avoid this, because it can accumulate into millions and millions of rands, because they are flying these people to these destinations, and they ought to have ensured then that they've got valid travel documents.
You said that what you found as, for example, fruitless and wasteful expenditure didn't necessarily reflect the true position because it was based on samples.
Yes, Chair.
But nevertheless, it seems to me to be a very significant amount because, if I'm not mistaken, it was, it's 300 million. Is that right?
Yes, Chair.
Now, even if it was 50 million in the context of SA, that would be significant, isn't it?
Absolutely, Chair.
Even if it was 5 million, would it not be significant still?
It would be significant.
It would be. So it's difficult for me to think that if you were correct in terms of the samples that you took, that for 2016-2017, that financial year, if there was a minimum of 300 million rand in terms of fruitless and wasteful expenditure, it could be much more, but the minimum of this. It's difficult to think that the previous year there was no significant fruitless and wasteful expenditure. There was not even 5 million that your predecessors should have picked up.
Absolutely.
Yeah. And if they had picked it up on what you have told me, they shouldn't have given a clean audit for the previous financial year. Is that right?
If they
had picked up fruitless and wasteful expenditure of 5 million.
If they picked it up and have assessed it,
yes,
and have arrived at a decision that is qualitatively material,
yes,
then they shouldn't have
yes,
issued a clean audit.
yes.
That's why it's important then that in terms of that, what were their considerations? What considerations then did they put
yes,
into that to arrive at a certain decisions?
Yes.
Yes.
Well, you have been in the auditing profession for a long time. In terms of your own experience, any entity that has got this kind of fruitless and wasteful expenditure in a particular year, what are the chances that in the previous year it had none at all? In terms of experience generally.
The chances are very low, Chair.
Yes, thank you.
Chair, there was a finding of fruitless and wasteful expenditure of 7.3 million rand in the prior year. That'll be addressed by Ms. Hofmeyr in PwC's evidence later. Mr. Sokumbela, I'd like to now focus on a few of the issues and transactions that the Commission has already heard evidence about in the course of the aviation evidence hearings. And I would like to begin with the Swissport ground handling contract. Was that a contract that came across your radar as part of the audit?
Absolutely, Chair.
Can you tell me about that?
It's part of the findings here.
Yes, I can take you there if it's helpful.
Yeah, maybe if you can take me there.
If you're in the same file, and we're in the same annexure that we've been in, it's 1077.
That's DD20C.
DD20C,
Exhibit DD20C,
Indeed.
page 117.
1077.
1077.
Thank you, Chair. Chair, this is this tender, Swissport SA tender. It was one of our, when we're doing the risk assessment for the purposes of our audit at SAA, it's one of the tenders that we've identified as the tender that we need to ensure that we test it. I think there was a lot of media attention to it. And there were a lot of challenges, I think, that were reflected there. And it formed part of our specific selection. You remember yesterday when I was explaining the concept of sampling is that at times when you're doing your risk assessment, for example, things that are on the media, or maybe there are deviations that are done, or maybe there's suspicions that the procurement process was not followed, then what we normally do then is to identify those tenders and test them specifically. So this is one of those, Chair. So one of the concerns that we had with this tender, Chair, is the fact that this tender, it took 4 years. Anyway, so I think Menzies then felt that they are being disadvantaged. So they wanted then SAA to extend the deadline so that they can have an opportunity to submit the tender. However, SAA did not grant that extension. And that ended up Menzies then taking SAA to court, and on the 4th of December then 2009, the High Court of Johannesburg ruled in favor of Menzies. I think it's under the case number 08/22988. And the decision then that was made there was setting aside the tender process, as it was found to be unconstitutional and unlawful, in that Section 217 of the Constitution was not complied with, in that the process was not in accordance with the system which is fair, equitable, transparent, competitive, and cost-effective. On the basis that SAA granted an unfair advantage to Swissport and Bid Air, since they were supplying SAA with ground handling services 6 months before the proposal was sent to, and also that they will be having all the required documents for them to be able to satisfy the requirements of the proposal. One of the concerns then that we saw there is that even though that contract was set aside, it appears that SAA continued with the contract of award, did not stop, and it was awarded until the end of the contract.
They just disregarded a court order.
That's what appears.
Yes, that's what appears.
That's what appears. It appears that they continued. My team member that was responsible for this also engaged with sourcing specialists that was responsible for this grounding tender. It says that I don't have the name of this sourcing specialist, Chair. And apparently this sourcing specialist indicated that although the High Court set aside the tender process as it was found unconstitutional and unlawful, the then CEO of SAA, I think it was Mrs. Mzimela, the CEO of Swissport, as well as the CEO of Bid Air, agreed to continue with the contract until the end of the contract. So I don't know what was the basis for them agreeing to say the High Court has set aside the contract, but then it continued. So that was the first concern that we had with the Swissport tender. But then, Chair, there was another tender also. I think is the reference number for the tender is GSM 39/11. Because that tender, SAA again went on a confinement process, again, also for the ground handling tender, and also confined it to, I think, to 3 service providers this time, being Swissport, Bid Air, and Menzies, for the ground handling services. And the closing date was the 27th of May, 2011. On 18th May 2012, it was the final selection of suppliers, and the cross-functional sourcing team of SAA recommended the award of the services to Bid Air, to Menzies, and Swissport SA for 5 years. And you'll see, Chair, that there's a table A in that finding, where the table A then was specifying in terms of then the types of the type of ground handling services, that which ground handling services is SAA awarding to each supplier, and at what cost is SAA gonna incur or is gonna award the contracts with. If you see on table A, the ramp handling was awarded to Swissport SA for 1.2 billion rands, and the power auxiliary unit and wheelchair services to Swissport SA to the value of 131 million. And the package weighing, it was not awarded. The ground power unit to Swissport SA to the value of 85 million. The passing was awarded to BDA to the value of 81 million. And the aircraft interior cleaning was awarded to Swissport SA for the value of 109 million. Document verification was awarded to Swissport SA for the value of 20.6 million. And the value, the toilet and water was awarded to Menzies to the value of 96.9 million. And then the express and courier cargo was not awarded, provision of driver, flight operation not awarded, and the crew transport was awarded to Swissport SA to the value of 52 million.
Mr. Sokumbela, can I pause you there? It's not necessary for us really to go through all the detail of this, because it has in fact been traversed already in the aviation evidence.
Absolutely.
Just to assist you, the evidence we've heard previously is that a tender process was run as you've just described.
Absolutely.
But that no contract was signed for a period of 4 years or so. And that over that period, Swissport provided ground handling services on a month-to-month basis. But that a contract was only subsequently signed in 2016. And that the rationale was that the 2016 contract was grounded in or rooted in the tender process that had been run in 2012. Does that accord with your memory?
Absolutely, Chair.
Can I ask you, and that history is set out on pages 1078 and 1079.
Absolutely.
But just on 1079, if you can go to the foot of the page, can you take us through the last two paragraphs at the bottom of 1079?
Where, Chair, is saying validity period of the tender.
Indeed.
Okay. Chair, there is a validity tender period of tender GSM 03/2011. RFP GSM 039/2011 indicated that the tender is valid for 370 days from the closing date, being 27 May 2011. Therefore, tender was valid until 30 April 2012. On 31st July 2012, letter of awards were sent to Swissport SA and Bid Air, indicating that SAA wishes to extend the validity of the bids for a further period of 3 months. And it also indicated that in the event that SAA does not receive any objection to its intent to extend the validity period, your acceptance thereto shall be assumed. Based on the information on the file, there is no proof that extension of validity was also requested from Menzies Aviation South Africa Pty Ltd. Thank
you. And if you go over the page, the audit findings deal with some case law there, but if you go below there, it says, therefore, SAA negotiations to extend the validity period after expiry with Swissport SA and Bid lacked transparency. What did you mean with that finding?
Chair, what we mean with that finding is the fact that the validity period for the tender was already expired, and there's a court case that there's a precedence on this particular issue, because the court case, Chair, that we're reflecting there is that of Telkom SA versus Merit Trading Pty Ltd and others, where then it was held then that as soon as the bid validity period is expired without making an award, then that tender then is unsuccessful. Then it doesn't need to, we need to start from scratch.
Yeah.
And in the middle of the page, that deals with the chronology that I've just taken you through, with the signing of the contract in the last row of that table on the 14th of March. Can you just read the paragraph below the table?
That's below the table.
Yes, it should be highlighted.
Okay. It should be highlighted that the protracted procurement process may also hinder SAA's ability to fulfill its mandate and to capitalize on potential cost savings. The fact that SAA ignored the court ruling to set aside the GSM 239/2008 tender is unlawful and thus irregular.
Thank you. Mr. Sokumbela, just explain what, you selected a sample of contracts and transactions and tenders to look at. What put Swissport on your radar? Why did you select that as part of your sample?
Chair, that was as a result of the risk assessment process that we've conducted. And the Swissport tender was one of those tenders that was on the radar for us to actually ensure that we select it and test it, because the risk associated with us not testing that tender was very high. Meaning that for us to mitigate our audit risk to an acceptable level, we ought to have ensured then that we selected and tested that tender.
And the contract that was entered into, the Swissport contract was entered into on the 14th of March 2016. That's the previous financial year. It doesn't fall into your financial year.
Absolutely.
Of course, the tender process too was in a much earlier financial year.
Absolutely.
And in that time there was month-to-month contracts.
Absolutely.
Had you been auditing the previous year, would this have been a contract you would have included in your sample?
Chair, I would have included it in my sample if it was not selected by the previous auditors, and if they didn't test it. Then, and also if the contract was still effective in the current year. Oh, sorry, I would have, it would have fallen within my scope of work.
Chair, I see we have reached 1 o'clock.
Yes. Remember, you were alone in making an assessment yesterday.
I deeply regret the assessment, Chair.
How far are you from finishing with the witness?
Chair, I want to take Mr. Sokumbela through two or three other transactions that we've dealt with in the aviation evidence, and then we are just about done.
How long do you estimate that to take?
I tried to avoid answering that. Chair.
Well, we need to look at that
Yes.
for the reason that today we can't go beyond 4 o'clock.
Indeed.
So we need to see whether we will start with the next witness or not. Because if we won't start with the witness, then it may well be that they can be released to a date that we will use. So that's why I'm trying, because if you are going to need an hour from 2 to 3, then we're left with another hour. So the question is whether, if we finish at 3 with him, we would use the next hour for the witness, or whether we would look for another day. But it may be that we should use the next hour. But what if you might go to beyond 3 o'clock? We must think
Yes.
about that.
Chair, I do think I would conclude by 3 o'clock.
By 3 o'clock.
Yes.
And I know that you would be saying internally, subject to the chairperson's questions.
Always subject to the chairperson's questions.
And then we could use whatever time is left for the next witness.
The remaining hour, yes, I
Yeah.
think so, Chair.
Okay, all right. Let's take the lunch adjournment. We will, it's about 3 minutes past 1. We will resume at 5 past 2. We adjourn.
All rise. 2015 from the office within the Department of Trade and Industry of the True BEE Commissioner. That was addressed to the then chairperson of the board, wherein it was, I don't know, Chair, if you want me to go through in terms of what...
I'm actually only asking whether this, my understanding is that these decisions were taken and this advice was given actually in the previous audit year.
Chair,
is that correct?
Absolutely, Chair, because I think you asked, Chair, the letters, when the letters...
Indeed.
Maybe let me give you the dates. The date for the Office of the True BEE Commissioner was on 13 September 2015, and the letter from National Treasury was 28 September 2015.
Thank you.
Yeah, probably that's just the part that's important, because just to put the context, because I've had a lot of evidence about those letters already.
Indeed. Okay. Thank you, Chair. The next issue, Mr. Sokumbela, was the selection of Swissport's BEE companies. Can you recall what issues the Auditor General found in that regard?
Chair, it's important to note that we did not see the requirement in the tender that of the True BEE. However, I think in 2016, in a memo that the then Chief Financial Officer of SAA to the board, it was noted then that the selection of the True BEE firm, it was not clear in terms of then how that selection process was done. And what is important then to note is that because I think the Swissport and SAA could not agree on how the True BEE firm should be appointed or selected, and then I think SAA then terminated the services, terminated then the contract with Swissport. I think on the 16th of, it said it terminated on the 16th of February 2016, wherein SAA then provided them with a termination notice of 60 days. So that is one of the things then that we found, and also what we also found that in that memorandum is that it was recorded in the memorandum then that after then that termination, letter of termination was issued to Swissport, then the SAA and Swissport representatives held an off-record discussions, and an agreement was reached to enter into a five-year contract beginning 1st April 2016 until 31st March 2021. So I think those are the key issues, and also what we're concerned about is why were the discussions done off the record, and okay, we further requested them to say, okay, maybe somebody might have written notes in terms of what were the deliberations there, so that we can see in terms of how did they arrive at that decision. But I think management then said to us, if off-record discussions don't have notes. You know, so I think that was the issue on that selection of the True BEE firm. I think another issue, because what we did then, because JM Aviation was I think was then the True BEE firm that Swissport then utilized, and it was not clear in terms of how JM Aviation was appointed to be this True BEE firm, but we did just at a high level some background checks, using the Companies and Intellectual Property Commission website, and we realized that there's common directors between Swissport SA as well as JM Aviation, and This common directors, then that was a concern for us to say there's this BEE firm that has been that now is gonna be a BEE firm of Swissport, but it appears that there's a director. There's a director at Swissport that is also a director at JM Aviation. So that was a red flag for us to say this should have been a conflict of interest also. Why this thing was not identified, or why this thing. So to us, how this thing it reflected. You'll remember, Chair, yesterday I said our responsibility as the auditors is not to audit to identify fraud, but where we identify potential areas, we highlight them to management. And this is one of the areas whereby we said this is an indicator, and then we said to management, please investigate this thing further in terms of what happened.
Indeed, I was about to take you to precisely that. Can you turn to 1084? Sorry, you actually go back to 1083, and right at the bottom of the page it says recommendation, management should. Do you see that?
Yes, Chair.
And then
Well, maybe you should identify the people who were directors in both.
yes.
Yeah, will you just do that?
Chair, the common director that we saw was one director by the name of Voisile Aaron Nzeku, who was a director for both Swissport as well as JM Aviation, and the status in the SIPS website was active.
Yes, okay.
Thank you, Chair.
Yeah.
Mr. Sokumbela, at the bottom of 1083 it says management should, and it's under the heading of recommendation.
Yes, Chair.
If you go over the page, there's a series of recommendations. Improving controls, conducting contractual negotiations in a timely manner. The fourth bullet point, will you read that one?
Reconsider the approach of the supplier development program and the 30% through BEE contract allocation, and ensure that principles of Section 217 of the Constitution and instructions of National Treasury and DTI are adhered to.
And the following one?
Consider undertaking an investigation into the selection process of JM Aviation as a true BEE supplier.
And the last one?
Consider and disclose irregular expenditure of 362 million arising from the above mentioned findings.
Thank you. Now, you indicated that these off-the-record discussions could be an indicator of fraud. That, in fact, formed part of the auditor's conclusion. If I can take you to 1085, the heading there at the very bottom of the page is auditor's conclusion. And it says management's response is noted and additional engagements were held with management on the 12th of September 2017, and management agreed that there were numerous issues relating to the tender. And if you go over the page, the finding is based on the requirements of Section 217 of the Constitution of South Africa, which requires an organ of state which contracts for goods or services to do so in accordance with a system which is fair, equitable, transparent, competitive, and cost-effective. Can you go down to the last heading, which says contract allocation set aside to BEE suppliers and process and selection award of BEE companies? Are you there?
Yes, Chair.
The second paragraph under that heading says, with regards to the off-the-record meeting held with Swissport by management, that will not be accepted as the auditors cannot validate the discussions held because they were not recorded. This is an indicator of fraud and further investigation must be done. Do you know whether further investigation was thereafter done?
Chair, I don't have an idea if that further investigation was done or not.
Thank you. The last transaction I'd like...
Mr. Mbigiwa,
Yes,
you
Chair.
asked the witness to look at the recommendations where it says management should, but I see below that there is a response from management.
Indeed, Chair.
Was it oversight not to ask him to tell me what the response was?
It was, Chair. I went straight to the auditor's conclusion, which incorporates what management's response was. But perhaps, Mr. Sokombela, you could tell us how management responded to the recommendations raised by the Auditor General.
Chair, I think initially there was pushback from management regarding this finding. They didn't agree to the findings itself, and what is important was that management even distanced themselves from the appointment of the BBBE firm, saying that is a matter that is between Swissport and JM Aviation. It has got nothing to do with them. Safe to say, the board of directors were the one that made a resolution in terms of how they need to how this contract ought to look like. And if you look at the evidence that I presented, Chair, there was that memo where the contract was terminated, and there was 60 days notice, and then there were off-record discussions, and then after the off-record discussions, all of a sudden, then JM Aviation is coming to the fore. So that was the issue. So we deliberated.
Well, I'm surprised that's what they told you, because evidence has been given here that part of the board and part of management even took a trip to the US. So, yeah, okay.
Yeah, and Chair, we I think on the 12th of September 2017, we met then, especially the then acting chief procurement officer, because he was the one then that was responding to this to the finding itself, because they couldn't, based on what we found, it was very difficult for them to defend it, and they ended up conceding to the finding itself. Hence, then we ended up in the auditor's response, then recommending further in terms of what needs to be done regarding this particular transaction.
Mr. Sokombela, do you recall whether a contract involving the New Age media formed part of your sample?
Chair, what I remember was that there was a contract that we selected relating to the company that owns New Age Media. It's called. I just forget the name.
I can take you to the page.
Yeah,
it's one own.
TNA Media.
TNA Media.
Absolutely.
Exactly.
TNA Media.
Yes, it's at 1091.
Yes. Thank you, Chair.
And sorry, if you go back to 1090, that tells you what this table is.
Yes, Chair.
What was the issue identified in respect of the TNA Media contract?
Chair, we didn't get the information for us to enable us to be able to audit this tender. It was one of the information that was a limitation of scope.
And can I ask, that contract value is 1.3 million rand, which in the scheme of things is very small. Why would you have selected that contract as part of your sample?
Chair, I think as part of the risk assessment process that we did at SAA, there's a lot of contracts that we've identified as risk contract due to a number of reasons. For an example, the TNA media contract was a subject of media reports. So in as much as the value is very low, however, the public interest as far as that contract was concerned was very high. That was the reason, and it's part of the specific selections that we selected specifically that one.
And on the right-hand side, this is on page 1091, in the right-hand column where it lists the information not submitted. I understand that's what SAA failed to provide to you.
Absolutely, Chair.
And these documents...
that seems a lot.
I was going to say. It seems to be virtually every document that would have formed part of a procurement process.
Absolutely, Chair.
Would it be standard practice for you to ask for every document that would form part of such a process to identify compliance with SCM policy?
Absolutely, Chair, because we need to reperform the awarding.
And that would include BEC and BAC minutes?
Absolutely, Chair.
Thank you. Mr. Sokombela, I'd like to now take you back to your affidavit. That's in DD 20A. And we can pick it up at page 38. You've now taken us through the issues, the kind of key concerns that you identified during the course of the audit. Can you take us through what, in the audit opinion, in your final audit report, what findings you made and the qualifications and restatements that you made?
Thank you very much, Chair. Chair, it's important to note that we documented in the executive summary of the management report is an attachment to this affidavit as PS25, where we've documented our key insights into the audit report, especially the qualification areas or the modification areas. I think that is from page 10 to 12 of the executive summary. But the concerns that we had, Chair, was that one of the qualification areas was on property, aircraft, and equipment. It was modified as a result of a number of material findings that were raised in this line item in the annual financial statements. And if I can explain that, Chair, is that there's various findings there in that balance, in the balance sheet that we find. One of the issues that we had is that there's the existence. SAA buys a lot of components for the aircrafts. And these components, Chair, are very, very expensive. An engine can cost as much as 60 million to 90 million rands at times. And if I remember correctly, we couldn't verify existence of components of the craft, or we call them major spare parts. Or at the airline industry, they are called A-class rotables. To the value of over 2 billion rands, we couldn't verify existence to those aircraft, to those major spare parts. For us, that was a big concern, because also even that is a requirement for even for airworthiness of the aircraft, to ensure then that where those major spare parts are. For an example, if the spare part has been installed in an aircraft, you ought to have a source document that will tell the auditor to say this part has been installed in A340 600, for an example, or whatever aircraft it is, and they call those documents dirty fingers, because the technician that is the one then that is installing these particular parts needs to write in a job card in terms of what happened, and you'll find then that the job card itself then will have oil and stuff, and they call it the dirty fingers. So that was the type of information that we couldn't get. At times, for example, they will send maybe a certain part for repairs, maybe somewhere in Europe or America. Then they could. There should be source documents also that will tell us to say, no, this spare part has been dispatched to wherever location they need to send it, so that it can be verified that it was sent for repairs. So when it comes then for us testing whether then the assets exist, these major spare parts exist or not, we couldn't satisfy ourselves with that. Another challenge that we had on asset share was the challenge of...
Sorry. Does that mean that there were records which suggested that certain parts had been installed, but you couldn't, there was no proof of such installation, or was the position that there were no records indicating any installation of parts, or where certain parts that are important for an airline to keep, where they were kept?
Chair, when we're doing the physical verification, the expectation, especially for the major spare parts, the expectation would whether maybe these major spare parts are in a warehouse or in a storeroom, or if they are not in a warehouse, they are either installed in an aircraft, or if they are not installed in an aircraft, then they have been sent somewhere for repairs. Then in all of those instances, if we can find them to verify them physically at the warehouse, then they need to prove then to us to say, no, they are not here at the warehouse, they are installed in the aircraft. If then they are saying they are installed in the aircraft, then we need to see then documents that proves then that they were installed in the aircraft. If then they were not installed in the aircraft, maybe they were sent for repairs, then they need to show us documents then to say, no, this engine serial number so and so has been sent maybe to Rolls-Royce or wherever it was sent, so that it can be for repairs, so that it can come back. So that is the reason why I mentioned that, Chair, to say we didn't just went to the warehouse, and when we checked the warehouse, we didn't see the major spare parts, and then we made a conclusion. We probed further in terms of what might have happened.
Thank you.
Yeah, so I wanted to highlight also on the same category, one other aspect that we saw that was a challenge on assets was the issue of the SIA has been making losses. Meaning that the assets then that they had didn't have an ability to generate economic benefits. So then, to us, then that proved that is an indicator then that the assets might have been impaired. Then there's an accounting standard then that requires then the preparers then of financial statements to test whether the assets have been impaired or not. And we couldn't find then that evidence then that management have done that, have tested these assets for impairment. And that was one of the limitations then that we had. However, I think for the aircrafts, at least they managed to, especially the owned aircrafts, they managed to do something, because there are values, I think, that are published by a certain company, I just forget the name of the company now, that will have resaleable values of the aircrafts. So we could at least determine in terms of then what are the values of those aircrafts. And when we compare the values of those aircrafts with the carrying amounts as per the balance sheet, we're satisfied then that the aircrafts are not impaired. Those the owned aircrafts are not impaired. However, for the other equipment, like your major spare parts, because they are also subject to obsolescence as well, your major spare parts, other other equipment, for example, like simulators and stuff. We couldn't find evidence whether then they are impaired or not. So those were the major findings as far as the assets are concerned. Also, one other qualification area was on maintenance costs, because what we realized is that maintenance costs, there were challenges there, ranging from SAA recognizing the expenditure when they make payment, as opposed to recognizing expenditure when they incur it. For an example, when they receive invoices, they will keep the invoices and not record them in the books. And then when they are making payments, it's by then that they will record in the books. And in terms of the International Financial Reporting Standards, which is an accrual accounting framework, that is not allowed. So they couldn't. So that was an issue. Another issue is that there is another major maintenance. In the airline industry, there's certain maintenance. There's certain maintenances that the airlines needs to make. One is called the C-check maintenance. The C-check maintenance is done maybe every 2 years, every 1 to 2 years, and then there's a big maintenance. Is basically like an overhaul of the aircraft. I think it's done every 4 years. So SAA then didn't have a policy in terms of how then they need to deal, specifically with the C-checks. So the way then that SAA, for example, they would pay, they had a contract for those C-checks that was called, I think, the power by the hour contract, where then they will make payments, maybe to South African Airways Technical, and then South African Airways Technical then sometime in future will then perform then the C-checks, or they will get a supplier maybe to perform then those C-checks on their behalf. But how SAA was recognizing these checks was that the date when they are making the payment, they will recognize it as an expenditure, even though it's a prepayment, meaning that it's not supposed to be recognized in profit and loss. It's supposed to be recognized as a prepayment in the balance sheet. So those were part of the challenges that we had in the maintenance expenditure at SAA. Then there was also a qualification at the subsidiary of SAA, which is South African Airways Technical, because the controls there of inventory were very weak. And South African Airways Technical buys a lot of stock in the form of components also for the aircrafts, because they are an MRO, so they need to have parts that they will use then to service its clients, specifically SAA and other airlines. So then they will have then those components, your tires, your thrust reversers, among others, in terms of then what those parts are. But the challenge that we had there is that the controls were very poor there. What the standard requires then, that the inventory or stock needs to be recognized, needs to be measured in the books, in the lower of cost or net realizable value. What that means is that if you buy the stock, let's say beginning of the year, you buy it for 100 rand. Maybe by 31st of December, the value in the market of that stock might have been obsolete, because maybe the new product has came. Now it's no longer 100 rand, maybe it's 50 rand. So then the standard then requires you then to write it down to 50 rand. But what we didn't find that South African Airways Technical is how then SAA Technical complies with that important requirement of the standard. And then that then made us then to qualify them. And also they had a challenge also on on the inventory system that they were using, because there's a system that they were using that was called MEMIS system. And that system, I remember by 31st of March 2017, they discontinued that system, and then they procured another system that was called AMOS system. And we were concerned about that because the credibility of the data that was on that system also was not reliable. And they took the information from the MEMIS, it's like garbage in, garbage out, kind of. That they took this data then from this MEMIS system to the AMOS system, and there was no proper procedures that were done there, like your data migration and stuff. So we ended up then qualifying the inventory. But the qualification then that from the subsidiary, which is South African Airways Technical, when we evaluated it at consolidated level, we found that this is material for our own circumstances. And then, hence, then you will see it as a qualification in the audit report of South African Airways. I think, Chair, we transversed a lot about irregular expenditure. I'm not going to spend a lot of time there, but
yes,
it was a matter of we qualified them on irregular expenditure as well as fruitless and wasteful expenditure. There was a qualification that we had there.
Thank you.
Yes, maybe you go first, Mr. Mbidiwe. Maybe you are going to ask what I wanted to ask.
Well, Chair, I was going to ask about the conclusion of the audit. So if your question is on the substance that he's just discussed, then perhaps...
No, ask him. I can always come back to it.
Mr. Sokombela, you indicated earlier that there was a delay in concluding the audit, and that it was only concluded in December when the financial year had ended in March.
Absolutely.
Can you give us an indication of what an auditor does when there is a delay and events occur in the intervening period? Do you revisit things? Do you include them somehow? What does an auditor do?
Chair, it depends on the nature of those events, in terms of what those events are. But there's a concept of subsequent events. That concept is covered by the accounting standards and also by the auditing standards as well. For the accounting standards, is for the preparers of financial statements to keep to be on the lookout in terms of what are the events what are the material events that might require them as management to is either to disclose them in the financial statements or to adjust the financial statements. I think it's called, those events may qualify, can be adjusting events or non-adjusting events. The adjusting events, for an example, if I can make an example, is SAA. I think at SAA, can make an example at SAA, because SAA, if you remember, there was the competition commission. There was a case of the competition commission, and if I remember well, the judgment came subsequent to the year end in 2017. I'm going down memory lane now, but. And it said SAA needs to pay, I think, British Airways or Comair, I think, an amount, I think that was approximately 1 billion or so. SAA had to go back and adjust the financial statements and reflect that liability. Even though I think they were reflecting it as a contingent liability before, meaning that it was not in the face of the financial statements. So they had to go back and adjust it, because it was an event that was, before year end, it was there, everybody knew about it, but then it was confirmed now after year end, so they had to go back and adjust it. But then there are other events, for an example, that may be non-adjusting events. Non-adjusting events are those events, for example, that there was no indication that they were going to occur before year end. but they occurred after year end. Then the requirement is still for them to disclose them in the financial statement, to say there's this material event that has happened, but we're not going to adjust our financial statements with it. On the auditing side, also there's an auditing standards then that regulates how then auditors needs to audit those subsequent events, which includes, among others, auditors having to look at the minutes of the board of directors, scan the environment in terms of what is happening in the environment, what are major transactions that are happening within the entity, engaging with people that are responsible for in the entity to identify, that are on the lookout for subsequent for those events, among others. So that is the principle, in terms of then the subsequent events, because as an auditor, you don't want to face a situation whereby you sign the audit report, but there are major events that has happened between the date of the issue of the financial statement, the date that the financial statements were issued to you, and the date that you signed the audit report. So that is, in principle, that is the concept.
Thank you. Mr. Sokombela, before we proceed to the concluding part of your evidence, I want to return to something you spoke about earlier. You mentioned that you had had engagements with the previous auditors during the course of your audit, and that they had discussed their approach with you, in particular to compliance with legislation. Can you tell us about those engagements?
Chair, we had various engagements with the previous auditors. And myself, I took it upon myself to ensure that I engage with them as much as I can, myself and my team. And especially on the findings that we're getting at SAA, and also the limitations that we found in the audit files, and to ensure then that at least we get an understanding of what the issues are. But what my team has realized while reviewing the audit file was that there was not much work that was done on the compliance and supply chain management area. And I think there was a meeting that we had, if I remember well, somewhere in September, where we met...
September 2017.
Yes, Chair. Somewhere in September 2017, where we met the previous auditors. And I think I wrote them an email in terms of those deliberations that we had, and also where, all agreed that the work that was done on supply chain management area was not adequate.
Was this now the second area where they considered that either they didn't do the work or the work they did was not adequate, or is it the same that we talked about before lunch, same area?
It is the same area, Chair.
Okay.
It's the same area because I think to us, when we arrived at SA, we did a deep dive on supply chain management. But it was important to us because there's a disclosure in the financial statements of irregular expenditure. It's important then to us, before we go and select, let's say, big tenders at SAA, to understand whether maybe those big tenders whether they've been tested before or they were not tested before. So that's why then when my team then looked in terms of then that work, it was not commensurate in terms of how we would test our work, and then we agreed then that ourselves then we will then not rely on that work that was done.
Was it that bad?
I don't want to say it was bad.
Okay,
Chair.
all right.
I don't want to say it was bad, but yeah.
But you found that you could not safely rely on it.
Absolutely, Chair.
Yeah. Okay.
Mr. Sokombela, who was at that meeting?
I think Mr. Motibe and Miss Masasa, if I remember well. Because I would need to go back to my notes. And also there are teams also. I don't remember specifically the names, in terms of then what their teams are. I think those were the people, I think that were in that meeting. And we've met with them in various instances. Even before we signed the report, we requested to have an engagement with them, but unfortunately, I think Mr. Motibe had an engagement in Namibia in December, and we ended up meeting, I think, on the 15th of January, 2018. But in that meeting, we didn't talk about supply chain management because it was a matter that we discussed the previous year. But what we talked about in the meeting of the 15th of January 2018 were then the qualification areas, especially in the previous years, that have got an impact on the previous year's balances. So I think that was the last meeting then that we had with Mr. Motibe as well as Ms. Masasa.
And you mentioned that an email was sent after the 2017 meeting at which compliance with legislation was discussed.
Yeah, there is an email. There's various correspondences that I sent to them, because what I normally do is that when I meet a person, then I write an email to say, this is what we discussed, just to confirm what we discussed.
I say you do what attorneys do. Attorneys are well known for that.
Absolutely.
Thank you. Mr. Sokumbela, I don't think you've included that correspondence with your affidavit here, and we'd certainly appreciate it if you could have a look for that and provide it to us.
I'll certainly provide that.
Thank you. Mr. Sokumbela, the concluding aspect is the engagements that you had with SAA during the course of the audit. We touched on that in the context of irregular expenditure and fruitless and wasteful expenditure, and in the Swissport context. And I don't think it's necessary for you to go through all the correspondence. In general terms, can you tell us what the attitude was of SAA management during the course of the audit, and to your findings and qualifications that you would report to them?
Chair, I must say we didn't experience pushbacks at SAA. And the reason why I'm saying that is because SAA...
Except when you made findings, initially you said there was a pushback from management.
Chair, I think not significant, to the extent that it's like a very hectic one. No, I would be lying if I would say that. And the reason for that, if you look at the balance sheet of SAA, is not a healthy balance sheet. The board and management, what they were busy with was to ensure then that they engage the lenders on a regular basis, with a view to ensure then that they negotiate. It's either extension of the loans or get maybe new funding. And in the ground, then things then suffered in the ground. In the sense that they didn't have an appreciation then of what is really happening in the ground.
I think that takes us back to what I said earlier on, doesn't it? When I said, how can you hope to solve a problem if you don't want to see the full extent of the problem?
Yes.
So in the ground, matters were neglected.
Yeah, that was our assessment. Because now. Because the chief financial officer, the CEO, the members of the board, it's a crisis mode every day. It's a crisis. These people are in a crisis mode every day. They are meeting the lenders, they are meeting other stakeholders. And in as much as SAA is an airline, it can work on autopilot.
But it's got to be crisis mode all the time if you don't take time to go and see the full depth of the problem. Because if you take time to go and look at the full extent of the problem, then you'll be able to then say, what is the long-term solution and deal with that. But if you don't do that, you just want to address what's on the surface, that's what's going to happen.
Absolutely, Chair. And I must state that the instability as well played a very, very huge role, because if a new person comes and then goes, another person comes and then goes, then it becomes a vicious cycle, and then unconsciously then things then gets neglected, and things then they don't work. And that's why you will see in our insights that we've elevated the issue of instability, at SAA, especially at the board level as well as the executive management team, because you got to have certainty in terms of the people that are there so that they can have an appreciation of things. So my answer, Chair, to the engagements, we had engagements, very, very robust engagements with the audit committee, members of the audit committee. We had, I think...
Did that include Ms. Quinana? Was she not in the audit committee?
No, Chair.
Or maybe that was not the year?
That was not the year, Chair.
Okay.
Yes. We had engagements with the audit committee, the chairperson of the audit committee, the executive management team, the then CFO, the then acting CEO, the new CEO, the new CEO at the time. I think Mr. Jachana joined, I think, 1st of November 2017. We engaged with him before we signed the report on a regular basis. We engaged with Ms. Mieni as well. I think we had some, I think about 2 formal engagements with her. And in all those engagements, there were no pushbacks. They were even also making commitments, but unfortunately those commitments are not honored. So I think that is what I think on our side as an audit office we were quite disappointed with, because we did raise some issues. We thought then that some action, at least in the following year, in as much as I was not involved in the following year, but my colleagues that got involved in the following year audit also, they told me that those commitments that were made were not honored.
Well, what I wanted to ask you earlier on was, when I listened to what you found when you were auditing SAA, the challenges you found, difficulties in getting documents, and difficulties in being shown proof that certain parts of aircrafts existed or were there, and I get the impression that really SAA was in disarray. Is that a fair comment?
It would be a fair comment, Chair, because I think things were not looking good at all.
Yes.
Thank you. Mr. Sokombela, the management report that we were in earlier included a range of recommendations as to what management ought to do. Do you have a sense of the extent to which those recommendations were followed, complied with, actioned?
Chair, as I said initially, after the audit report, after the signing of the audit report in 2017, I was not involved anymore, but I did seek inputs from my colleagues that were involved, where then they mentioned to me that the commitments that were made were not honored, which is a disappointment, where I'm sitting.
Chair, that concludes my questions for Mr. Sokombela.
Thank you very much, Mr. Sokombela, for coming to give your evidence. We appreciate it. Should we need you to come back, we'll ask you to come back, but thank you very much, and you are excused.
Thank you very much, Chair.
Thank you.
Chair, I will hand over to Ms. Hofmeyr.
Thank you. And I guess the first thing she will do is give me an assessment or estimate.
Which will in all likelihood be entirely unreliable. Chair, we have discussed with our learned friends who represent Mr. Motibe. Our general sense is that I will not be able to make very much progress if we start this afternoon. There's a day's worth of evidence required in relation to Mr. Motibe, and I don't see great advantage in proceeding for the better half of an hour. So it was going to be our recommendation that we rather do adjourn now, we find another day, and we ensure that we can begin and complete the evidence in that day.
Okay, no, I think that's fine. I think that's fine. You will look at another day soon.
We will. We seem to have a few creeping witnesses who need to be allocated into the timetable. I mean that in no negative sense. I just mean that we've lost the time.
Yes.
But we will certainly come back to you with a proposal shortly.
Yeah. If at all possible, if at all possible, the time lapse shouldn't be
much.
Great. Yeah.
Absolutely, Chair.
Yeah. Okay, no, that's all right. Then we'll do that. So we'll adjourn now. There won't be a sitting on Monday, but on Tuesday we will have a sitting, and the rest of next week we adjourn.
All rise.